Good morning, everybody. Yo, what's up, Daniel? Man, what's up, Tony? Welcome, welcome, welcome. Yeah, we have a lot of key things we're going to talk about. I've been getting a lot of questions, um, and I asked the free Discord on my private community to give me some topics that they wanted to go over. So I decided that the best way for me to answer most of the questions uh, is going to have to do with just the overall structure that I lay out for my private community students. And so yeah, I'm gonna give you guys a lot of different topics on how to analyze yourself. But first, obviously, we're gonna go over our weekly prep call, kind of discuss some of the things that we wanted to see last week that came to fruition, which generally is the case. If you've been here for a while, you know that. And then, of course, go over why and all these different aspects. And then towards the end, after I get through talking about what I want to talk about, then we'll really dive into some intricate details if you guys feel you have any other questions about certain process-oriented things. But yeah, first and foremost, I just want to make sure that you guys can hear me okay, and if you can see what's on the chart clearly. If you could let me know in the chat, that'd be great, so then we can get that out the way. See if you could just let me know real quick. Give me like a 1 in the chat or yes. Yes? All right, cool. All right, so just do something real quick. All right. So as always, we're looking at the news. So next week we have CPI. So for those of you that are in the free community in Discord or my private community, and have been listening to ICT for at least the past couple years, even if it's been just a year, you've heard him mention over and over and over about the characteristics of each news event. They're like personalities, right? Just like every market has its own personality, own way of delivering, like its consistent ways of doing things. NFP and FOMC are generally two-stage events. Okay, so those events, at least for NFP and FOMC, it's one-sided, and then it does a secondary move, which is generally the main move. Or sometimes it just consolidates and doesn't do anything, right? But when it comes to CPI, okay, CPI is extremely one-sided. So a lot of times when you get onto the chart, when the news event comes out, price is just going to rip someone's face off in one direction or the other. Okay, and it a lot of times doesn't allow you to get in because it's either too quick or it's just too one-sided. So similar to the way we operate with FOMC or NFP like we did last week, if you do want to trade it, right, it's not recommended if you don't have your things in order, your risk process, your overall just trust in yourself to not break the rules. If that stuff's not intact, it's best to just study what I'm sharing here, right, and just study the different characteristics and how you should consider participating in those events if you do choose to do so. NFP, FOMC, we wait, right? You let the first move take place. You observe the higher time frame. A study that my private community has engaged in the last year or so has had to do with the like the overall part the NFP, FOMC, and CPI announcements have within the monthly ranges, a lot of times that's going to set up the potential move for the month, right? It goes back to what I've been saying the last couple of weeks, how the news events, if you look at them from the higher time frame view, if you have a particular higher time frame narrative you're trying to see unfold, you can a lot of times use the news events as macros for the higher time frame delivery. Say you're looking for a particular higher low to be attacked. Say you're looking for some PD array to be attacked, or if you're looking for some PD array on the higher time frame to make a move. A lot of times that's going to come from the news events, right? CPI, NFP, FOMC, so on and so forth. Okay, because institutional sponsorship has to take place. And similar to the macros on the lower time frame, the last 10 minutes and the first 10 minutes of every hour, the news events act in a similar way, but for the higher time frame. And I've said this before, right? I'm going to obviously keep repeating things that are vitally important. But if you take that information and you go do a study on it, including, from this month, study what took place and what we're going to talk about today, and see how the month ends. Take a screenshot of every start of a month, and then take a screenshot at the end, and keep tabs on when the news events took place and what happened as a result. You'll quickly see just how important this piece of information is, and it's just one of those things that helps you navigate and get closer to the market, so you can understand things. So yeah, Monday there's no trading. Sunday we don't trade, or Monday there's no news events, right? So automatically we're considering things as low probability, possible high resistance behavior. And then we got to think of power 3, obviously, right? So power 3 recommends or tells us that Monday up into Tuesday can generally be the consolidation manipulation of the weekly range. And then Tuesday, Wednesday is generally the strong impulsive time, right? Making price go in one direction. Generally it's the expansion of the weekly range. Then if a higher time frame PD array is met on Thursday or Friday, generally that can cap the weekly range, right? So this is, people hear power 3, they feel like they understand it, and then they move on to things, and then they kind of disregard basics. The more advanced topics you learn, like if you learn the most advanced or all the concepts, that doesn't mean that all of a sudden things are going to be very easy for you. You have to know when to use things, when not to use things, and no matter what you use, no matter what model you operate within for entry, power 3 is going to be relevant all the time, every day. And if you go and look at some other influencers or good ICT traders that know what the hell they're talking about, in one way or another, they're using power 3. They may not be on the lower time frames, but regardless, most of them are. But the ones that aren't, they also use power 3. Even if you use any other way of trading, power 3 can really amplify even retail concepts, like normal retail concepts other than ICT concepts. Power 3 is one of those pillars. It's like a foundation in a house. If you disregard the basics or the foundational fundamentals, which in this case we're talking about power 3, or any of the other basic pieces of information, your house is a house of cards. So you don't want to think that you need more advanced topics to be successful or consistent. You need the basics mastered, a way to enter, and then some of the other topics we're going to talk about after we go through our weekly overview right now. All right. So yeah, going into the week, Monday is going to be expected to be potentially high resistance, low probability because there's no news event, there's no institutional sponsorship, and it may lack a manipulative characteristic. Doesn't mean it won't happen, but it may be somewhat less effective to trade that day. Right? Again, doesn't mean there's no opportunities because there always is something to trade on. Whether it aligns with your model and overall view of what you think price is going to do at that moment, obviously is something that you're going to have to decide because we're all different, obviously. Right? Just want to mention, if you guys get value from the content that I provide, if you're here on a regular basis and you enjoy these types of videos and stuff, Definitely like the video, share with your friends, and don't forget to subscribe and turn the notification bells on, just so you don't miss the things that we do here if you do enjoy the content and get value from what it is we do. All right, so yeah, now we're going to move on to obviously our next stage in our analysis, which is the interest rates, right? So we go from news to interest rates. And we've been talking about this market, the yields dropping since we were up here. If you go back and look at some of the other videos, we've been talking about this falling, right? We were talking about these fair value gaps. We were talking about this consecutive delivery here of down candles as an order block on the weekly, the 2-week chart. We can kind of see how at this point it's kind of respecting the midpoint of that, at least for now. And I believe, yeah, there's SMT at these lows here, right? So keeping that observation in mind, and the fact that price is aggressively sold off here, one thing we can identify here is the inversion fair value gap. So price came off this low, created SMT between, you know, this low and this low, right? The 5-year had a lower low. This month is a new quarter on the 16th, so contract months are going to change from the first quarter to the second quarter. So this type of scenario is important to observe around these specific times, because if you want to gauge quarterly shifts, this is one way to do that, right? Observing SMT on the higher time frame going into a new quarter, because you have to build a reason why you think price would shift from one side to the other, if it does do it at all. And again, one of those ways is to observe SMT on the higher time frame going into the new quarter, which on the 16th of this month is going to be the new quarter. For those of you that don't know when the quarters change, let me go pull up that information so you could screenshot it. Good morning, Sufi. Appreciate you hopping on as always, brother. Let me go find it for you. Where did it go? All right, so this is what I'm talking about here. Okay, so definitely take a screenshot of this. Morning, Maddie. And I appreciate all you guys hopping on this morning. Maybe I should do these calls a little bit later for everybody. Seems like more people are awake at this time. No worries, Sufi. You don't gotta apologize, brother. I'm late too today. I couldn't wake up. Alarm didn't go off. But yeah, so take a screenshot of this. The reason this is important, especially if you're trading futures, is you want to make sure that you're trading the contract month. You can do the continuous contract, which doesn't really take into consideration the adjustment in contract months. But ICT has mentioned that if you trade the continuous contract, there's going to be certain gaps you're going to miss because they're not going to be present, right? For some reason, that's the case. So if you trade futures, you want to make sure you're on the right contract month, right? These are the letters providing the different months, the contract months, for each quarter. But again, this is extremely important, even if you do trade the continuous contract or even CFDs, because again, knowing when these things are going to take place is going to help you in terms of identifying important SMTs going into the new quarter that could then put you potentially in line with a change in the overall direction, right, or quarterly shift. So yeah, just keep that stuff in mind, okay? But yeah, so again, we have SMT here. Whether that is going to send price higher or not, obviously we're going to have to wait. Yes, Daniel, I got you. So yeah, first quarter starts in December for the new year, December 16th. It's on the 16th of each of these months. So December, March, June, and September contracts. Okay. So yeah, Make sure you take a screenshot of that. Keep that in mind. If you trade futures, and even if you don't trade futures, you still want to know when this takes place. Because again, you won't even have the opportunity to gauge a quarterly shift if you don't even know when the new quarters are. All right? Some people don't even know that there's different quarters in the stock market. Right? That's one of those super basic facts. And most people don't talk about it because they don't know. But hey, it's the internet, right? So yeah, we have this SMT. We want to see the behavior from this inversion for value gap here. Okay, let me drag that over. So depending on what the response is going to be from here, if we do get price to give a reaction, we're going to open up next week and we're going to have a daily fair value gap up here. So we're going to want to continue to watch what that's going to do as a result of this low being violated on this 5-year yield versus the other two. Well, the 10-year yield also swept. So the one that's got the strength holder vibes to it is a 30-year. But we're just going to have to see what's going to take place. You can see how over the last couple months, there's been a lot of cracks in correlation. There's been a lot of sporadic delivery that's taken place. Mainly due to the instability with certain relationships economically with our country, the U.S. versus the others, and tariffs, all that type of stuff. It's the first time that we, or at least for me, as a trader, it's the first time I've seen what the impact is going from, one administration to the next, and to see this dramatic change in the overall way that the government's running things. When they implement tariffs, I didn't realize how aggressive that would be, because I've never seen it, So the cracks in correlation when it comes to big time moves taking place in the U.S. economy and different adjustments. Obviously, this is a beautiful learning curve for all of us because, these aren't things that take place every day, every month, most times every year. Every 4 years, certain things can change, but at least for the U.S., but now we have what the impact is, at least short term, in terms of tariffs, like what that does to the markets. So yeah, earnings also is something I want to mention. It's not something that's like dramatic or anything, but earnings also come in every time a new quarter happens. Okay, so those contract months that I just showed you guys and the different quarter changes, generally earnings are going to come around those times as well. And earnings can have a pretty volatile impact. So you want to make sure that you know when these things are happening. All right. Doesn't mean you have to be like an earnings expert, but We've got a question. Does Trump being in office actually cause bad price action for certain periods? So it's not that it's bad price action, it's increased volatility. And tariffs supposedly, just based off what we've seen, at least short term, are causing disruptions. And he's mentioned it's going to cause disruptions, but at the same time, not to be like political, but as an American, I don't like to see my country being taken advantage of and having unfair trade practices where everything we get almost is imported, and then based on world events and the, chaotic things that take place, seeing how it has impacted us from 2020 to, that time period where that crazy sickness was taking place, it kind of really opened people's eyes to the fact that, America needs to be strong and independent. Same with every other country. You don't want to have to be too dependent on others. And because there's an adjustment, right, with the tariffs, importing things from these other countries allowed things to be cheaper. And it, stimulated the economy in certain ways and increased profit margins for certain companies, which is why companies have been doing so insane under the previous administration. And now that there's going to be a disruption in that, we're seeing what the effect is going to be from us trying to break away from one way of thinking to another. And long term, it should be beneficial for the U.S. But if the dollar gets strong, which is what's trying to be implemented here through tariffs, a lot of times that's going to have somewhat of a negative impact given the intermarket relationship understanding between how the DXY and the indices, do their little dance together. It's generally opposed. So if the dollar becomes strong as a result of what's taking place, obviously that's going to have some type of impacts towards the indices and foreign currencies as well. So yeah, that's the thing. To be a trader, you don't necessarily have to be deeply into politics in America or any other country, but you do have to understand what's taking place because, again, as we always talk about, we want to know the why behind certain things, right? And part of that why, as it relates to the financial industry, has to do with geopolitical events and things that are taking place, moves that are being made, and certain relationships that are either doing well or having some difficulties related to financial stuff between countries, right? So I hope that stuff makes sense. Again, we can get lost in the weeds when it comes to that stuff, but in reality, what we really need to focus on is how certain things will impact the markets, right? The markets that we trade. And those are some things that are taking place today. Interest rates are also going to be impacted the next couple of months, especially going into this new quarter. There's a lot of adjustments to try to decrease the T-bonds, right, which is generally related to our housing market and overall credit cards and the interest associated. But again, we don't have to get lost in the weeds when it comes to that. We just have to understand what's taking place and then view how that's resulting in markets like the interest rates. Because again, the bloodline of the indices, the bloodline of the DXY, which impacts all these other currencies as well, has to do with what the bonds and yields are doing, okay? And of course, the yields, for those of you that may be new, that haven't heard this before, the yields, when they're dropping, that promotes downside in the DXY because they're positively correlated in many aspects. And then the bond market, or T-bond futures, or T-notes, those directly impact what U.S. assets like the indices are going to do, okay? And that dance, that relationship that takes place is very important to understand, at least in terms of what the effect is from one asset to the next. That being bonds, how that impacts the indices and foreign currencies, and then of course the yields and how that impacts the DXY. Because again, we want to have a whole market approach to understand risk on and risk off behavior, which is just a fancy way of talking about how each market impacts each other, because everything is connected in one way or another, either positively correlated or negatively correlated, okay, or reverse correlated, I should say, right? But yeah, so we've been talking about this dropping since we were up here in this area, right? And obviously I mentioned that if the midpoint of this was going to be respected, it's going to continue to drop, and we had our targets down below us. Majority of these, at least these other two, the 5-year and 10-year yields, have delivered to the sell side I was potentially aiming for, as price continued to fail to hold at any of these bullish PD arrays. So going into this next week and the rest of the month, we want to see what price is going to do here. If it breaks above this high, right, creating a bullish order block, getting back above these levels here, that's not necessarily something we want to see if price is going to be bearish in this market, promoting downside in the DXY. Okay, so we're going to want to continue to monitor what takes place here as a result of this huge drop. Now, if you also consider the fact that, come over here to this other time frame, we want to see where the open is, right? The open of this month is down here, right? So it's this candle. A good practice to continuously observe each month is power 3 on the monthly chart, okay? So we can see that there's an open price here, drag that over, and price has, at least for now, dropped down below, and then now we've gotten above. So whether that is going to continue as a result of that SMT I just pointed out in that higher time frame, or if it is going to decide to respond away from these consecutive up candles, which in this case has created a potential bearish breaker, right? If you want to look at this like this from the low of this down candle, these consecutive down candles, up to the upper portion of it, we may see this act as a bearish breaker, right? But prices now came up here, so we're going to have to see what the response is going to be, keeping in mind power 3, keeping in mind the SMT at the lows there. If this does end up continuing to rage higher, that's going to result in an overall downturn in the indices at some point or another. Okay, and of course that's also backed up by the potential impacts or seen impacts of the tariffs, right? And again, the president himself has also mentioned that there's going to be some type of disruptions. So that is not something that the market likes to hear. So when it comes to the indices overall, and of course the interest rates and how these things are behaving, we want to continue to monitor how that's going to impact the markets. On its face, obviously that is negative news for the stock market or the indices. And if this is going to continue to rise higher, maybe even eventually breaking through the midpoint of this candle here, these consecutive up candles creates a bearish order block. So the midpoint of that range from the low to the high, measuring that out, that's one of the PD arrays we're going to watch. We have the midpoint of this down candle here, which has created the bearish breaker, right? Low, high that took a high and then dropped down below. So we want to see if that's going to be respected or not. Currently, we have this weekly fair value gap being respected at the upper portion here. So you can also make the argument that there's consecutive down candles here. Prices responded off that. We have previous new week opening gaps that are also somewhat being respected. There's an entire new week opening gap down here that you can see has been respected as well. If we clone the area there and get the midpoint of that specific gap there, we're going to want to see how price is going to behave. So technically, if we're looking at our 3 PDA rule, at least on this time frame, it seems as though price has shifted higher off the heels of an SMT, off the heels of the fact that the president has been mentioning that there's potentially going to be disruptions, which is geopolitically a negative view, or just overall, politically a negative view for what could be to come. And then, of course, the indices, if we look at what's taken place, I mean, we have literally disintegrated, right? Like it's literally been decimated, completely destroyed all the gains from October of last year, right? Up until now, right? Just completely decimated. We've been identifying these potential downside targets as well, so we've been ahead of this, right? We mentioned that, if there was going to be retracements, we had this large wick. Again, we had this pointed out while we were even up here, right? Once it broke down below this low, attention was down to here unless proven otherwise. There was an SMT at the lows. There pretty much still is. But again, we're going to have to see what's going to take place because this is in no way promoting bullishness. And if the yields are going to continue to run higher and seek that buy side and start violating even more upper range PD arrays, it's just going to further confirm that, prices now confirmed the downside delivery. Again, we're going into a new quarter, so we're going to want to continue to monitor the behavior we see. But as of right now, unless we see more evidence that the indices are going to continue to favor, or if we see evidence that the indices are going to run higher, we're going to have to monitor how that behavior is. Otherwise, we're going to continue to press down below and seek more sell side delivery because we don't want to go against the overall downtrend, right? It's literally proven, very obviously, the price is not interested in going higher at the current moment, at least until things start to die down and the effects of these different political moves start to take place. As a result of what we have seen currently, though, at the start of this year, things have been very bearish. Seasonally, up until March, generally, there is an interest for price to go lower. And if you think of the yearly Power 3, generally the start of the year is generally something that we don't really anticipate any type of bullishness taking place. But, it also really depends on what's taking place throughout the world at that current moment and what the current market is doing. At least for now, for what we're dealing with this year so far, price is favoring downside. So unless we're proven otherwise, aka unless we see a very strong displacement to the buy side and intermarket relationships respecting buy side delivery for the indices, we will continue to press down towards sell side delivery, continuously identifying sell side targets. Right here, you can also see how there's relative equal lows formed. Okay, so that could be a potential target. This is the weekly chart, so we can see how there is this weekly low. Something I always like to mention is, you go to these higher time frames, find the current candles, and get the most recent highs and lows from the monthly, the weekly. In this case, it would be this high. We also have a fair value gap in here. And then we also have this low. Once the new week starts and a new candle starts to print, we now have downside targets available as well, that being the wick, right? Break that down into quadrants. Those are all continuous targets until we potentially get down into these equal lows, which have been left, right? So yeah, with that being said, again, that will be confirmed if we can see the yields continue to provide evidence for buy-side delivery. And again, we have a supporting factor being the SMT down below. So we'll see, right, if that's going to be something interesting. CPI and NFP, like I mentioned, those news events, if we're looking for certain things to take place on the higher time frame, you want to consider the economic calendar as a macro tool, right? It helps you identify when institutional sponsorship is taking place or should take place, and then of course that could support whatever direction you're trying to go in. And it can help you with timing for a particular move, because there's a lot of questions as far as, okay, I see this higher time frame analysis, but when can I expect it to deliver either to a particular level we want to see a reaction from, or when are we going to see the response away from that particular area, right? Economic calendar helps you identify that. It helps you map out when certain things can take place, okay, or when they should take place. So again, that's a rolling study for you to do. So you want to definitely keep that in mind. So one thing I also want to go back over before we move on to these other assets is the importance of seasonality and generally the impacts of seasonality. All right. So let me pull that up real quick just so I can talk about that for a second. Okay, so if we go to the S&P, I hope you guys can see this okay. I showed this the last week or so, and we talk about this every month. We talk about this, okay? So we could see how the three lines here, which support or represent the 5-year, 15-year, and 27 years of long-term data, okay? So seasonality over these time intervals has proven that these characteristics are what takes place for the most part around specific times of the year. Each green line is the new quarters, which we talked about earlier, okay? So this is important for those of you that don't know why this is important, because everything is programmed, okay? Everything has a rhyme and reason. Nothing is random in the marketplace. And seasonality is one of those fascinating studies you can go do. If you take the asset you like to trade, it doesn't matter which asset it is, they all have seasonality. But if you take the asset and you go back in the last 10 years and you observe each month and the characteristics that the seasonal chart is showing you, and then cross-reference it to the last 10 years of delivery in the asset you favor trading, you can start to see very strong characteristics of interest in terms of price doing one thing or another during particular times of the year, right? Like whether it's bullish or bearish in March over the last 10 years, whether it's bullish or bearish in May or June or any other month. And then this gives you a baseline to go into each new month throughout the year, which you can use to confirm or deny a particular narrative. And when seasonality is not being followed in terms of, what it's favoring in the seasonality versus the current asset at whatever time you look at it, that's telling you something, right? If it's overall a bullish market in, say, the indices, right? This is something that most people don't think about because they don't understand this topic. Say it's bullish, we're in an overall bullish environment for the indices, but you see a bearish trend or a bearish interest on this seasonal chart. Generally, you can use that in terms of like when price could retrace, right? Say we're in a bullish market, but we go into a new month and it's declining for the indices. Let's use the S&P, for example. But if you, at the same time, you can observe that the overall market trend throughout the year has been bullish, that's when you can observe the fact that the seasonal characteristic that's going against that bullishness can be a time when you frame out retracements, right? If price is declining in a bullish trend overall. Does that make sense? I hope that makes sense. But then vice versa, right? If price is overall bearish, which at the current moment is seeming like it's going to be the case, anytime you see very strong bullishness, that can present you with a bullish retracement, right? So, and then of course, if price is just not agreeing with anything, right? If it's just not doing anything that's similar to anything we're looking at on the seasonal chart, price may be consolidating, right? And there may be something happening in the world, So again, if that's what's taking place, that's just another element to you being able to observe if it's a time for you to push or relax and lower your risk a little bit because the environment is not favorable in overall fundamental terms. All right, seasonality, COT. And then the interest rate markets are generally the pillars to our back-end knowledge supporting or negating a particular narrative we're observing, okay? It's not just about one asset. It's about how all assets work together. And then, of course, you can layer things on top like seasonality, COT, and then, of course, like we mention all the time, the interest rate markets, and get a very strong idea as far as probability for a particular thing happening over another. All right, so I hope that makes sense. Okay, so and also, right, the bonds and yields, they also have their own seasonal influence. Okay, they also have their own characteristics when it comes to seasonally how things behave. Commodities as well. Okay, so yeah, with that in mind, okay, there's a potential opportunity for the indices to set a seasonal low, as we just seen in the seasonal chart we were looking at. So it's pretty interesting how a low forms at a particular time where that is potentially the case, when a particular seasonal impact or seasonal low or high is forming. In this case, it's a seasonal low going into March, right? And then, of course, there's a bullish interest. That may promote, even if price ends up being bearish because of all the geopolitical stuff that's taking place in the indices, that may be a reason why price gives a strong retracement going into this new week as a result of that. From a logical level, right? There's a weekly or 2-week order block here, or let me see, is it a normal weekly order block? Yeah, it's a weekly order block, right? So it's very interesting how things start to overlap, right? In terms of timing and then, of course, fundamentals, right? So there's a seasonal low that's clearly indicated as a possibility going into March. So it's pretty interesting, right? That alone is a beautiful example of how important or how useful seasonal impacts are, right? And understanding how to observe this particular chart and use this tool. It's just one of those supporting factors because, again, we want to build trust in our decisions. And this is one of those tools that assists us, aside from all these other things that we go over on a weekly and, in many cases, a daily basis. Okay, and then monthly basis as well. And then what I just introduced is on a quarterly basis, right? So yeah, hopefully we see something impactful going into the new quarter. Sometimes they don't really have much of a logical delivery around the new quarters. A good rule of thumb is to observe these quarterly shifts or quarterly adjustments from a lens of so similar to holidays, right? How the day before, day of, and day after, right? generally that's low probability. Okay, and there's going to be potentially chaos that takes place, and things could be cracked in correlation and not really show clarity in terms of how price delivers. Well, it's a similar thing when it comes to quarterly changes. All right, because there's adjustments taking place, large money is adjusting from one contract to the next, and a bunch of things on the back end are taking place that can mess things up a bit or make things a little bit less clean than we normally like to see. So the week before, the week of, and the week after, as a rule of thumb, when it comes to quarter adjustments or quarterly changes, right, or contract month changes, generally you can observe those 3 weeks as potentially a little bit more difficult. All right, things may be a little cracked in correlation. Things may be less clear. So the reason this idea is important, and including the way we operate ahead of, on the day of, and the day after of a holiday, is because you need to know why you should trade or should dial it back a bit. Right? It's just like, I make the same analogy every week when it comes to this topic. It's like knowing when to rush into the battlefield or when to kick back and just wait and try to pick your shots more decisively. You don't want to be in a battlefield and just run into the middle of the battlefield when bullets are flying around you. You don't want to have to do that unless, of course, it's necessary, which, in trading, it's not a life or death situation, right? At least I hope. So yeah, it's very important, right? It's one of those things to add to the list of when to trade, when not to trade, or how to operate around particular things that are taking place in the markets at particular times of the year, and then of course on particular days, on particular weeks as well. So it's a very, very thoughtful way of looking at things. Most people don't think about things this way because it's the boring stuff, but hey, it just goes back to the fact that trading is for everybody, but it's not for everybody because not everybody's willing to do particular things that are required, if they want mastery, right? So going back to the yields, right? Again, right, we already have a shift in market structure here. Shifts in market structure are different than breaks in market structure. Generally, breaks in market structure can lead to overall adjustments in sentiment and direction in terms of narrative. Shifts in market structure can be anything from a continuation, right, like this is a shift back in alignment, or it can be a shift in market structure to retrace to an opposing PD array, right? Just to set up what the higher time frame is deciding to do, right? In this case, it's a shift for a retracement, all right? So we would need price to break down and show a response from here in order for us to trust that price is going to continue to go lower. At this point, we have inversion for value gap. We have a couple of new week opening gaps violated. We have a swing high violated, and now we're resting inside of a higher time frame daily fair value gap. Also, you can notice that we're dancing below a weekly fair value gap as well, pressing into a bearish breaker, right? It's a clear bearish breaker. So depending on how price operates, if we were to blast through this daily fair value gap here, I'm assuming that, okay, that is justification for us to then start to seek further buy-side targets. In this case, if we're going to see a continued downside move in the indices, this is something that would support that idea, okay? Because we're a week before, going into the week of, and we'll have the week after the quarterly adjustment, we're going to want to continue to monitor how this behaves, right? Price has been extremely favoring to the downside. So we'll see going into this new quarter off this SMT, we'll see if that's going to present us with a reason to continue to trust buy-side delivery, which again supports the downside movement in the indices. Similar, or based on what I was saying earlier too about the seasonal chart, if you look at the fact that there's a seasonal low that forms that generally presents bullishness going into March, that could be part of the reason why we see a retracement bullish this coming week for the indices, off the heels of us being extremely bearish. So those are some things you want to keep in mind as we move forward. And again, the line in the sand for us for bearishness in terms of the yields is going to continue to be these premium arrays, right? We already have 1, 2, and then if price violates this daily bearish fair value gap and it gets above it, then that's plenty of reason for us to trust that this market's going to continue to go higher. And then in terms of intermarket relationships, that supports the downside movement in the indices, coupled with the overall political moves that are taking place for the U.S. economy. Okay, so that's kind of showing a very deep understanding of how world events are impacting the markets, and then our overall analysis process in terms of intermarket relationships, and then overall, invalidation, validation principles along with seasonality to justify a particular objective. Meshing all that stuff together, you could see it's a lot more advanced analysis concepts than just looking at higher highs, higher lows, or whatever else any of these other idiots on social media like to promote, right? Which 90% of people fail with, so we don't want to be in that camp. So clearly our stuff is a little different. Clearly ICT traders, if they know anything about what they're talking about, they have a pretty deep depth of knowledge and different tools in the toolkit, which I hope, based on what we've talked about, hopefully you can start implementing these things as well. And then, of course, if you struggle to mesh everything together, I hope that these calls start to help you glue things together. I know Tony, Nutty Fafa, I know Maddie, one of my private community students, and Sufi, you guys have been really locked in and been giving me some really good feedback. So I'm greatly appreciative to see the progress you guys have been making. So continue to keep me updated and keep showing up, and hopefully we can get you getting towards what you're trying to accomplish. So yeah, this is my assumption for the yields. Line in the sand, again, is going to be this daily fair value gap, how we behave there. So if we can get a strong response away from that, we could start to try to adjust our thinking in terms of, maybe this continues to go lower. But for now, I'm going to assume that, this is potentially going to get violated. I'm going to assume that there is, because of the overall world events that are taking place with the U.S. economy, we don't have any positive news coming out. So I will be willing to be proven wrong. But again, I need more evidence. And based on what the price is showing us right now, there's no evidence the price wants to be strong in the indices. And again, if that's the case, that's supported by a rising yield market. All right, so we'll see if that is something that wants to continue off the heels of the SMT. So yeah, again, line in the sand before we move on is the upper portion of this daily fair value gap. I should have included the volume imbalance. So we're going to see how that behaves. And then, of course, we can't forget this bearish breaker. Again, if you guys give value from these videos and the things we talk about, definitely don't forget to like and subscribe if you haven't already. And if you have friends that you think can take value from these types of conversations and just want to be around people that know what the hell's going on and prove it, definitely let them know about what it is we do here. I like word of mouth better than paid marketing because it just presents cohesion within the community. So if you guys could do that for me, that'd be much appreciated. So yeah, this is the assumption for what we see here. We have a new week opening gap here. We have a new week opening gap here as well. So we're going to want to watch how that behaves. I'm going to assume that if price breaks down below this new week opening gap, same thing over here, then obviously we'll have reasons to try to target even deeper sell side, maybe even get excited enough to hit this, but that's not justified right now. So we're going to have to see what's going to take place. We've already had an open, and then prices now, it declined, failed to break the low here, and now we've shifted market structure to the buy side. So we'll see if we can break above this daily fair value gap, because if that takes place, that's going to be a overall break in market structure going into the new quarter, which again aligns with some of the things we've been talking about in terms of the time of the year we're in, and what to look out for. And this SMT would support that because we've been super bearish overall in this market. So if that changes, it's reasonable around the time of year that we're going into, which is the second quarter of the year. All right, so those are my thoughts about that market. Let's go to the bonds now. So looking at what has taken place, we called for the buy side up here to be targeted and the fair value gap that was resting above here. you can notice how price ran out the high and then rejected. So I mentioned also on some of the live calls recently, and then for the last years in my private community, how when a higher time frame level's taken, we want to see how price behaves once that is accomplished. Okay, so we see an SMT here also. Isn't it interesting how this is doing pretty much the opposite of what this market's doing? SMT at the lows, there's SMT at the highs. That is very significant in terms of, what price looks like it may want to favor moving forward. All right, we've taken out buy side and it's rejected on the bonds, and the yields have taken out sell side and now rejected and left SMT on both of the asset classes. So with that being said, this continuing to go lower, this would support the downside movement in the indices. And then, that's opposed to this, which supports upside if this goes higher in the DXY. So if all that stays intact, the relationship is now starting to become a lot more clear in terms of what the current condition could be going into the new quarter. Okay, it could be an adjustment from the bonds going higher and the yields going lower to them switching to the yields going higher and the bonds going lower, which would support higher DXY and lower indices. And the indices have been tanking off the face of the earth recently. So again, this could further justify that assumption. The price is going to continue to short. So unless that's proven otherwise, given the things that we see here, we're going to continue to favor downside short interest in the indices until proven otherwise. And as always, what proves otherwise? Price breaking through premium arrays to then start to support buy side delivery, and then we have to see a change in this market as well. So yeah, we're going to continue to use these two markets to justify the downside delivery in the indices and potentially higher moves in the DXY at some point. We're at a pretty decent level here. Price has definitely fallen, right? There's a huge cracking correlation that's been taking place, but we can see that they're starting to show some evidence that things may be starting to change on the back end going into this new quarter, supporting price in the DXY potentially getting interested in buy side delivery. We do see that there's been some very dramatic moves taking place in things like the foreign currencies. There's a huge cracking correlation between the currency relationship versus the indice relationship, right? This is not something that generally takes place. Generally, the foreign currencies will follow what the bonds are doing, similar to what the indices are going to do with the bonds. But again, we have seen a massive cracking correlation, mainly caused by the tariffs, right? And the dramatic changes in the U.S. Financial aspect of things, okay? But again, in the back end, it seems as though the bonds and yields are supporting higher DXY potentially in the near future going into this new quarter, and then lower indices, which we have been seeing. So again, unless that's proven otherwise, we're going to overall favor narratives aimed at sell side delivery, but the bias, because there's a difference between narrative and bias may change. It may give us a retracement, right? And then whatever price ends up doing off the heels of that retracement, obviously we'll continue to monitor bonds and yields and adjust as needed. But for now, we're going to continue to find sell side delivery interesting in the indices. And then we'll see how price wants to behave within the currencies. But for now, I mean, they're continuing to attack buy side, and pretty dramatically. Okay, we did call ahead of time the monthly fair value gap as a target way down here. On its way to that area, we were targeting highs. These consecutive down candles here acted as a bullish breaker, okay, or these consecutive up candles. You could see that the wick here was also very big, and when price retraced into that, it left the breakaway gap. That is a very strong bullish signature. So, as price was moving, keeping in mind the cracking correlation, regardless, we were still aiming for buy side targets and wanted to see how price was going to behave inside these areas. And clearly, price is very much interested in attacking buy side for the GU and EU, which has been the case, right? We haven't adjusted that mindset, right? We've been continuously trying to hammer buy side until we got here. Because we've blown past both of these levels, I want to see what the response is going to be. We've hit a higher time frame PD array. If you take the price action here and drag it to the left, we can see that there's a bearish order block. We can see that there's a gap in here. Okay, so we drag that over. This may instigate a retracement to the downside. And if the bonds want to go lower, right, if the bonds continue with this dramatic attack to the sell side here, that's going to support us potentially turning around and at least giving a retracement going into this new week. We can see the open of the month here was for March was down here. Okay, so prices opened and got above the open price of the month. So you want to keep that in your observations moving forward. But yeah, we also have this fair value gap here, and then we have this monthly fair value gap. So I'm going into this new week anticipating that there's going to probably be some type of retracement. This has been aggressive, so it's not unreasonable to think that there could be some type of retracement before price wants to go higher if it does choose to do so. Until we see this proven otherwise, we're going to continue to trust that this is going to go higher narrative-wise. But obviously the bias can change because bias and narrative, at least the way we view things, are different. Okay, bias can change from trending to consolidation to retracement, but narrative overall doesn't really change on a day-to-day, week-to-week basis, right? In this case, the narrative has been bullish, and bias has been bearish at times, right? It's consolidated at times, but then overall, the interest has been favoring buy side, which has been the narrative. So yeah, I wouldn't be surprised if we get a retracement on GU to come down into this level. If price does start to smash through this in alignment with the bonds potentially going lower, the bonds being this market, off the heels of the SMT here, with the SMT at the lows on the yields, if we do get price breaking down for the currencies, of course we want to see DXY go higher to support that idea. And then if that takes place, we'll adjust, right? And then start to try to make an argument for whatever's happening in that moment. For now, it seems as though price, if it does retrace, that's all it's going to do. It's going to retrace. I'd like to see price continuously leave these levels if it's going to stay bullish like this for any extended period of time. And then, of course, if it violates this monthly fair value gap, this fair value gap here, if we go to the weekly chart, right, it's not really much to go off of in terms of that besides maybe this inversion fair value gap, right? So I'm going to continue to be bullish for the currencies unless this low was to be violated, because that would be pretty interesting for me to observe some type of interest maybe adjusting from price being so aggressive to the buy side to then seek sell side. This is the example of narrative. Unless that level is violated, any retracement is just that. It's a retracement inside of the bullish trend. The trend, in my opinion, won't change unless this area is violated. Because if you consider how many PD arrays on the higher time frame are within this view, if we go to the daily chart, you couple all that together, that significantly changes things because it's been so bullish. You want to be able to learn to trust your bias, your narrative, right? The only way you can do that is understanding when things change. When do things change? When higher time frame levels are violated, multiples of them, okay? And then, of course, when intermarket analysis aligns with whatever adjustment you're trying to make. Otherwise, you continue to hold on to that narrative, that higher time frame direction. You continue to hold on to it. I didn't just make this up. This is something ICT mentions. That's why higher time frame analysis and what we do here on a weekly basis is so vitally important. I've made the separation of bias and narrative. That's something that I personally do because that's what assisted me in being able to navigate bias inside of a higher time frame direction so I wouldn't be swayed to change all the time and flip-flop. You know, that you got to be able to trust what the higher time frame is doing. And me separating bias and narrative highlights the importance of that. So I hope that makes sense. Not many people, if anybody, look at things that way. They don't look at it that way, right? That's just something that has helped me personally, and I see that it's also helped a lot of my students as well. And people that just like to hang out with us over here. I've gotten really good feedback from that different perspective, but that is something that I personally came up with for my own learning, right? So yeah, keep that in mind. It's one of the very important things that we do here that separates us, because it's very helpful. It's not like a be-all, end-all, obviously, but sometimes you just need a different perspective on certain things, and it really, really has an impact, right? Because narrative doesn't change every day. Bias can. Bias being a continuation, a consolidation, or a retracement in a higher time frame narrative. All right, so I hope that makes sense. Again, my line in the sand is going to be down here. If price was to just aggressively smash that, then we would consider potentially adjusting the narrative. Otherwise, we're going to continue to seek buy side. Possible buy side is up here. All right, so we'll see how price behaves in that area. We can also observe this. All right, so again, those of you that sit through these long conversations, these long calls, when we go through every single element, I hope that you start to see how we're painting the narrative. We're getting data from different assets, and it's helping us justify certain things that we're trying to make decisions on. Especially, it's especially important that we do this at the beginning of every week, because you start to paint the narrative before things start to take place. What was it, the Art of Warfare or something from Sun Tzu or something like that? The battles are won before they even happen. This is where you're trying to win the battle before it happens. Okay, that's why this is so important. That's why I talk about it every week in a very repetitive manner. It's vitally, vitally important. Okay, and it just helps build clarity and trust as you march through the weeks. Different elements like Power 3 also assist us in that. Okay, so yeah, we have this for value gap here. It's pretty interesting how we hit a higher time frame PD array. Okay, so when a higher time frame PD array is met after price has been so aggressive, when the opposing PD arrays are met, this is important too, so make sure you note this and write it down. When higher time frame PD arrays are met, opposed to, in this case, the bullishness, that's when you can start to observe or reasonably frame out when retracements take place. I talked about this in my counter trend trading video I did on YouTube. So if you want to go look at that, you can go do that. But in a nutshell, that is a very strong perspective. If you think of yourself as a counter trend trader, that's one of the ways you can start to frame out counter trend ideas. Or even if you're a trend trading trader and you want to go with the trend, not only does the bias and narrative observation we talked about and the process with that, really help you, but this is also something that can help you, right? Being able to open up the doors to even opposing frameworks within the higher time frame narrative, so you can have even more opportunities and be able to trust them, because it's very trustworthy to understand the logic related to when an opposing higher time frame PD array is met, that is reasonable to frame out a retracement on, because even opposing PD arrays are going to have a response, because the PD arrays are important. They're just areas in price where it could be responsive. In this case, it's an opposing PD array. This opposing PD array can be used to possibly frame the setup that retraces into this PD array that could then set up a continued move to the, in this case, buy side. So again, this is price navigation 101. Okay, on the higher time frame, understanding how the responsiveness is with specific areas in price and the behaviors that is caused as a result of these other important points of interest, it's so important, because if price retraces, people see, oh, well, it was retracing, I think I'm going to push. I think I'm going to try to get in because it's bullish. Well, if you understand what we're talking about here, you won't be interested in trying to push buys right when the week opens, especially if you think of Power 3 as well. You'll realize that there's a PD array here that could instigate a possible retracement, right? We've taken out buy side. which in this case in a bullish trend is external liquidity. So since external liquidity has been taken and a opposing PD array was met, it's very logical to start the new week in terms of a retracement. That's setting aside power 3 view, right? Power 3 is used with what we're talking about here, but you can see how every time you get on the chart to start a week or any type of day that you look at, if you keep these things in mind, right? What liquidity has been taken, how the responsiveness should be from there. Is there a PD array that's above that that could result in price retracing? And then where price could retrace to if you were trying to see price continue to attack the buy side in this case on this higher time frame. You don't want to buy at highs. You want price to retrace. There's a reason we wait for price to go from a premium to somewhat of a discount, right? If it's extremely aggressive, it probably won't get down into these deep areas, right? But you want to keep in mind how this type of stuff behaves, because you could frame out counter trend ideas using this idea. Or you could, if you're just a trend trader and you want to be within the trend, this can also assist you in knowing when price is going to go against you with your higher time frame narrative. But then you can also start to frame out where price should be more responsive in line with the higher time frame direction. Okay? In this case, there's a potential for a reaction from this order block here that could then deliver price into these PD arrays we've outlined here to start the week, which is in alignment with bullish power 3 if that's going to be the case. So once price gets down to here, you can start to consider maybe on Tuesday or Wednesday, because remember, the economic calendar will present you a perspective that allows you to frame out when things can take place on that higher time frame. So when it comes down into this area, if there's a news event that takes place, CPI, maybe that'll be when it responds away, or maybe CPI is going to be the reason that price uses to send it into this level. But then once it's down there, because nothing's changed in terms of bullishness, that would be where we would then consider getting back in line with the trend, unless proven otherwise, right? Being proven otherwise is obviously price breaking through these levels here. Go look at some of the questions here. So essentially, the way you're looking at this is that since the market has passed through the buy side liquidity, you are now resetting your bias and waiting for power 3 to pan out on the lower time frame before making your move. So yeah, I mean, and that's one way to look at it, right? When price takes out particular liquidity pools or runs into an opposing PD array, you can technically reset your view as far as, you know, what price is potentially going to do in the short term to set up another move back in line with your higher time frame narrative. Narrative being different than bias, right? Bias can be price retracing inside this bullish narrative, continuously reaching for buy side. But yeah, when it takes out or hits a level like this, that's when you reset your view. Because since it's been really bullish, you're not going to want to go in and just continuously think like everybody else and throw buys without getting some type of opposing delivery. Because price takes one liquidity and then goes to the next, the opposing liquidity, to then set up another move back in line with the higher time frame delivery. In this case, right, it's been bullish, hit an opposing PD array. So it's more logical and more safe, in my opinion, not guaranteed, but safe, to assume that there's going to be some type of retracement before price wants to then continue to rage higher, because they have to have opposing liquidity, right? So now we're mixing in the thought process of smart money. They take one side of liquidity, run down to the other side to then continue in their intended direction. They have to sweep up orders to pair on the other side, especially with the big orders that they have. They put billions of dollars into the trades, millions of dollars into trades. So they have to gradually put in pieces to their objective, right? So there's a little bit here, and possibly going to be a little bit more here if it's going to continue to eventually seek this particular objective. So we're mixing in multiple schools of thought inside one process, right? And then observing when price hits a particular level, what is more likely to happen over the other. Considering we've been so bullish, so one-sided, it's very reasonable for them to want to retrace into a different, the opposing liquidity, which is down here in the sell side. And then once price gets there, right? You could frame that whole idea using what I just talked about in terms of the opposing PD array, triggering retracements, especially when price has been one-sided. That area here can reasonably use to frame out counter trend ideas, half risk, because that's our protocol when it comes to counter trend idea trading. But then once it gets down into this level, this is where I'd like to then position myself for continued buy side if it continues to support price going higher, right? And then of course we have all the other layers we can add, like seasonality and the economic calendar, and then obviously intermarket relationships, so on and so forth. But yeah, essentially that's one way to think about it, Daniel. And Tony said, notice that during New York session, you noted, okay, for sure you noticed it during New York session last week. I'm glad you noticed it. See, it pays to pay attention, but then it also pays even more dividends when you go in and try to observe it yourself. Because what I do here on this channel and in my private community, I'm trying to build independent traders. I don't want people to be attached to me in terms of, you know, putting their success into my hands based on what I do. That's not why I'm here. I'm not a financial advisor, and I can't do that legally. And I wouldn't want to do that because, you know, I want you to be able to do things on your own. And, you know, once you get to that level, if you choose to hang around and just hang out, because this is a family after all, then I want it to be because you're just wanting to hang out and, you know, provide value maybe to others that are also new to what we do here, or just want to be around traders that know what they're doing. You know, I want us all to be able to be assets to each other. And then, of course, bounce ideas off each other when it comes to that point where everyone is independent. You know, I value that a lot more than needing people to be attached to me. You know, I want it to be an attachment in terms of friendship and just cordial traders that are seeing eye to eye versus dependence on one person. You know, because that's just, I mean, I guess it's good for a business model for people to sell courses and stuff because they will feel they need to be attached to the mentor in terms of needing to see what they say in order to make money or be profitable in a demo account or whatever. But I don't know. I'm just not that kind of person. I want to see independence because it makes me feel good knowing that I've been able to pass the blessing on to others. So, you know, it's a saying like you could teach a man to fish, or that whole situation, right? You can give a man a fish or teach them to fish and they'll be able to eat for a lifetime. I'm trying to teach y'all how to fish. You know, I'll give you the fish like we're doing here. I'm giving you concepts and topics and different wisdom and from my experience and stuff like that. But I'm hoping, my prayer is that you guys can use that to then learn how to fish on your own. You know, I don't want to be the sole signal provider. I want to create signal providers, right? I want you to be able to print your own stuff and be confident in that because that's a blessing that keeps on giving. And the friendships I'm able to build off of, that being my objective, has been something I've greatly valued over the last 5-6 years. Glad you're all improving independently. Yeah, Sufi, I'm super glad too. It's amazing to see you guys and the testimonials I've been getting recently. Shows I'm achieving exactly what I want to achieve, right? To be honest, I don't even bother watching my trading or watching any other trading videos. It's just you have a yeah. Hey, well, I appreciate that, Sufi. I just try to keep it real and be honest. I'm trying to be the change that I want to see in this industry because this industry is amazing, but it's filled with a lot of greedy, ignorant, idiotic people that just want to take advantage of those that are not informed, and it's unfortunate. You know, it's a very predatory market. Not only a predatory market, it's also bred predatory people because it's very easy to get someone to be attached to you if you have this skill set. It's very easy. Send out a bunch of entries, show them that you're profitable, and if you don't teach anything and you're only giving signals, people will feel like they're stuck to you. You know, I don't like that dynamic. You know, it's not, because what if something happened to me? I always say it. What if something happened to me? What does that mean? You just don't trade no more? I mean, then if that's the case, then you'd have to really question why you're here, because that's at the end of that's a waste of time. At least from how I view things. They're all selling you an illusion. Yeah, though, and mind you, I do have a private community, right? And there's no course or information I'm selling. I sell experience. You know, I like the way that some of these other extremely veteran ICT traders classify things. They say they're selling experience, and that's a beautiful way to look at it, because most people are selling information and stuff that probably isn't going to be helpful to anybody, versus the approach of selling experience. But then at the same time, I'm also giving experience, because it's not all about just money to me when it comes to being public. You know, I'm trying to help people because I know I needed help and I had people help me, you know. But then again, I was also needing to deal with a lot of things on my own. You know, I've dealt with a lot of different things, both in my personal life and then obviously as a trader, that I've had to deal with on my own. And I wish that I had someone here to do these types of things. You can only get so far in terms of that experience when you're watching videos. But if there's someone that's willing to sit there and give you their time and sit like we're doing here, I mean, I wish I would have had that more. You know, I had a good amount of people that were there. Daniel was actually someone that was with me when I first started. And it's amazing to see that we never lost contact. And I'm grateful for him because technically he got me into trading. You know, he showed me that there was opportunity. So Daniel, as I always say, bro, I greatly appreciate you. And you know, it's been a blessing, dude. It's amazing. People like you are the reason why I'm coming out public trying to do these things to help others too, because I was helped so tremendously just to see the opportunity. So yeah, it's much appreciated. And I'm glad that I could pass that blessing on, you know, because Daniel, you know, from the very start, that's been my objective. You know, it's always been that. So, you know, I'm glad to prove that after all these years, it's, you know, that's never left my mind. And success hasn't changed me at all, really, you know. So yeah, God bless you, Daniel. Thank you for all you've done for me. It's much appreciated. Got to give you your flowers. But yeah, so yeah, getting back to the analysis, right? Again, these counter trend ideas are just another one of those things that that really assists us in the counter trend view, opening us up to having more, I guess, more opportunities laid at our feet. Because if we're just going one direction, okay, it's obviously there's enough opportunity, especially with the continuation moves. You know, but when you can have the opposing view, it also deepens the ability for us to find more opportunities and not feel like we're missing stuff. Okay, and in that case, you know, it's invaluable. You know what I mean? So I hope that this stuff makes sense in terms of the counter trend framework and how that can assist you in price navigation. I can't stress it enough how important it is. Because, you know, you get into the market, you want to know when to trade, when not to trade. Sometimes when higher time frame PD arrays are met too, price will stall out because you want to think of it like a brick wall. You know, like price hits a brick wall at times, has to, you know, like a slingshot, pull back a little bit, and then, you know, once it hits a PD array or has a news event that comes out, it can, you know, really put life into the move that you're trying to operate within and get you back in line with things. So yeah, I hope all that stuff makes sense. And yeah, so I hope all this stuff makes sense in terms of what we're looking for here. I'm assuming that this PD array is going to send price lower, and it's going to give us this response from this fair value gap and give us a nice move potentially to the buy side, right? So moving on to the DXY. So yeah, we can see how, let's actually start from the monthly time frame. Take some of these off. So yeah, price all the way over here, obviously it took buy side, cleared out the rest of this fair value gap here. Then we got that responsiveness. Price is dramatically declined into this. I pointed this for value gap out for a while since we were up here. I said that there's a likelihood for it to come down into here. And then how price behaves when it gets down into this level would indicate, what we're going to potentially have interest in doing. Price did blow through this. Again, we have the yields looking like they are going to try to push price in a possible bullish direction. Again, we're just going to have to monitor what that's going to do. If you take this technically and look from this low to this high, we are also inside of this monthly equilibrium point. As you guys know, when price hits equilibrium, sometimes it can present us with consolidation. We could see how price blew through that though, right? Of course, this was also being supported by the yields because they have been bearish. Okay, they were really, really bearish. So again, we're just going to have to see how that's going to behave. At least for now, DXY doesn't really have much of an interest to give us bullishness. It's very, very strong to the downside. So going into this new week, given what we see here, we got that monthly fair value gap. If we look at the weekly here, we see that there is relative equal lows here. You could see the responsiveness from the middle portion of this wick. We've been talking about that a lot lately because whether you're trying to gauge continuous delivery in one way or another, whether you're on the higher time frame or the lower time frame, you could see how the respect for particular wicks, right, in this case to the downside, if it respects the midpoint, that's supportive of price going in that direction, in this case to the downside. It's the same when you see price trying to deliver to the buy side. If there's an up wick that price trades into, right, the midpoint of that can act as support, or it can act as a discount array. Or if price is going up and it has a down wick, if price trades into that, the way it behaves inside that and how it respects or doesn't respect the quadrants of the particular wick you're observing, in this case, the down wick or the up wick in an uptrend. If the midpoint is respected or can't even get traded into at all and price just starts to deliver, that is a very strong bullish signature. Almost as strong as when price leaves fair value gaps open, right? So as you're observing price continuously delivering, trying to monitor order flow, because that's what you're doing when you're looking at things like that, you're monitoring characteristics of order flow. If you can continuously see that respected, then you're in a very healthy directional move, right? And then of course we have all these other layers we add on, but in terms of in the moment, this is one of the most effective things you can do to manage your trade, right? Like if you're on the lower time frames, entering a trade based on what you see on the higher time frame, as price is moving towards a particular target, you want to keep these things in mind. The wicks and small details that price is showing you, they're all programmed. It's all done on purpose. So it'll intentionally leave wicks available. It'll intentionally trade into them and respect particular portions of the wick. And then how it delivers from that is very impactful, similar to how we observe the traditional PD arrays, like order blocks and fair value gaps, right? In this case, you could see this order block here, midpoint couldn't even be traded into, so price continued to drop, right? We see this large drop here that blew through this monthly fair value gap. So again, we want to see what price is going to do here. I believe that there's another one down here. So we definitely want to see how price is going to behave related to that. This is a monthly chart. Obviously, things don't dramatically change on the monthly chart. It just goes back to bias and narrative, right? Bias changes because of retracements and different things as you're trying to observe the higher time frame move. But the higher time frame move, because that's the parent time frame, is generally going to stay one-sided until things change, right? But in this case, right, we have this monthly fair value gap here with equal lows. So that's pretty likely that it's going to probably blow that out. We may get this next week to retrace, maybe to hit this and use this as an inversion area. And then, of course, if it retraces into that and then possibly responds to the downside, that's going to be supportive to the overall downside delivery. Again, I wouldn't be surprised if we get some type of retracement here going into this new week. We do have CPI. So again, CPI may be used to give us more clarity as far as what's overall going to be what price is going to be interested in, especially because we're moving into the new quarter. You want to hold very light bias and narrative because of the impacts of FOMC, NFP, and then, of course, the quarterly adjustment that's in the process of taking place right now. So yeah, I'm assuming because we've been so bearish, price is going to reasonably want to run up above and try to target some type of buy side. How price delivers inside these areas here, that being the daily fair value gap and the monthly potential inversion fair value gap, is going to really impact what price is going to really want to do moving forward. I think that, we could, if this is going to continue, it should retrace using power 3 for the week, hit this and aggressively start to target the sell side. If it retraces, hangs around in here, and eventually gets up above this level, that is not something supportive of price continuing to drop. If we break above this area here and the yields continue to march higher and aggressively blast through buy-side liquidity, the yields being this market, right? If it breaks out above this and we see DXY do a similar thing, you notice how they look very similar. That's because they're related. But if it does this and gets above here, then we're going to favor potential reasons to continue to buy. That again will support price favoring shorts and more sell side in the indices. So again, I hope you can start to piece together over these continuous weekly prep calls how each market impacts another. What does it mean when things are cracked in correlation? It means low probability. So you're going to have to, because that's the first layer of probability, of high probability versus low probability. Are the markets symmetrical related to risk on, risk off? Okay. And then, of course, everything else that's ahead of that or layered on top of that, can also be used to confirm or negate things. But this is the first trigger for you to go into every time you look at the chart. If you want to understand the characteristics of the current market conditions, are markets moving symmetrical? It's a first stage of either high probability or low probability identification. All right. So yeah, DXY, again, that's my assumption. Because we understand power 3, because power 3 is a pillar in our analysis, we're going to observe how price wants to behave here when price opens up. If we're going to be in a bearish market, we want it to open up on Sunday, go above Sunday's open price into a logical level that can be responsive to the downside. The logical level above Sunday's open price, just looking at this asset here in this current moment, the open price is here. The PD array or area of interest that could be targeted to trigger more shorts is up above. It's a daily fair value gap. It's a monthly inversion fair value gap. And then it's also got a swing high here where anyone that was shorting probably rushed their stops to. Okay, so we need price to run up here, trigger out losers, to pair smart money's sell positions with willing buy side liquidity at a logical level, right? And of course, Power 3 helps us identify where those levels are with the PD arrays as well, because those are levels that price likes to be responsive from. Okay, and you can see that this wick here, remember what I said, opposing PD arrays. The midpoint of this weekly wick is an opposing PD array to this downtrend. So price fell into that. So as a result, this is probably going to be the trigger that sets up a counter trend idea. Going into the start of a week, your first view, after you frame out what you think the overall trend is going to do, or where it should end up at the end of the week, which I'm assuming it's going to blow these lows out, going into the start of the week, you assume that price is going to go against your overall analysis, because we understand that Power 3 is a pillar to our analysis. It's always there. You can't avoid it. And every single week, you can see it every day, every hour, every 4-hour candle. They all have Power 3. Okay, it's just the way that candles operate. And even the 15-minute has a Power 3. Every 15 minutes, there's a Power 3 taking place. Obviously, those are less impactful in the grand scheme of things when you're comparing that perspective versus like the daily or weekly or monthly Power 3, because all those lower time frame delivery aspects work within the parent time frames. Again, that's why higher time frame so important. But power 3 is vitally important going into the new week. So again, what are we assuming? We're going to assume that if this downtrend is going to continue, price is going to likely trade up, right? If it doesn't do that, I'm not interested in catching a falling knife. I'm just not. It needs to do something for me to know that smart money has paired losers. So then when price responds, whether as a result of a news event or just price retraces and hits the level and starts to deliver away from it, we have to know that there was work being done. We have a swing high here that also assists us in that. And again, our line in the sand is going to be if price breaks out above this daily bearish fair value gap. Okay? Because if it gets above here, now we have a daily inversion fair value gap. We have this monthly fair value gap. And then, we can continue to try to observe whether price is going to maybe dig into this. And then, of course, if the weekly, this is also a weekly bearish breaker as well. You could take this down candle, drag it over. But it's also a weekly bearish order block, right? If that is to be violated, right, say it violates all of that, then clearly, are we going to look to short at all? This is the first trigger for us to think, okay, there may be a change because price has now violated multiple PD arrays down here if it gets up into this level, right? We're so close to this equal low down here, and there's fair value gaps down here as well in that higher time frame monthly chart. We're so close to that, and when price is so close like this, it generally doesn't want to deeply retrace. So again, that's something to consider as well in terms of making this our line in the sand for continued sell side, right? Because it should not spend too much time deeply retracing if this is going to be an area it's going to blow out. I don't care what they say about support and resistance. I don't care. Okay, it will most likely retrace a little bit to make people think that it's strong support. And then knowing what we know, price could deliver away from it and then victimize those people after price logically retraces against what everybody's probably trying to do, which is short the market right now. And then we can victimize them as well versus being the victim and thinking price is just going to turn around just because, it made strong support, right? So yeah, I hope all that stuff makes sense because that is our roadmap. That's our game plan. It's going into the new week for DXY. And then of course how that behaves is clearly going to have an impact with the indices as well. And then of course all of that can also be justified or adjusted depending on what the bonds and yields are going to do. All right. So with all that being said, I mentioned a lot of things there. So I want to definitely ask you guys if there's any particular questions. Higher time frame wick is just a reversal with a PD array in it on a lower time frame. I've never really thought about it that way. A higher time frame wick is just a reversal with a PD array in it on the lower time frame. Yeah, I never looked at it that way. Have you heard ICT telling the retailers model? Yeah, they got their hope and pray model. It's hilarious. Very interesting. Hope, for one, is not a strategy, but you still should pray. That's for sure. Praying is definitely part of my model. Okay. You got to put God first, right? Wasn't for him, none of this would be possible. 100%. But yeah, do you guys have any questions related to the process that we've went through? We've been on for an hour and 30 minutes. We talked about a lot of things. But okay, so everything makes sense. I mean, Sufi, Tony, who else? Nutty Fafa, Maddie, right? Anyone that has spent a ton of time watching the process and how repetitive it is and how we do the same thing over and over and over for weeks on end. Hopefully you start to see how repetitive this stuff is. Okay, it's over and over and over the same thing. The only thing that changes is obviously what news events are taking place, where price is currently at, and the PD arrays that are around us at particular times, right? That's the only thing that changes. Everything else stays the same. We have our validation invalidation process. We have our line in the sand that we draw. We have our assumed target, which in this case for the currencies here, it's just a retracement to go higher potentially. And that would be supported by DXY going higher, retracing to do a very similar thing, but the opposing view. because we're thinking power 3, right? If it goes down, right, if it's going to target the equal lows down here we have identified, we need to see it go higher to stop out anybody that's up here, and then give us a response from a logical PD array, preferably with a news event that triggers price in our intended direction. In this case, is the sell side, unless we're proven otherwise. Do you know any other PD arrays that are unknown to the regulars? In terms of, well, volume imbalances, obviously, I mean, they're kind of known, and people don't know that those are PD arrays, right? Volume imbalances are PD arrays. Regular trading hours gaps, new week opening gaps, those are PD arrays. It's like the secret menu of PD arrays, right? And what else? Then we got the wicks. None that I could think of off the top of my head. If I think of any of the other unlisted PD arrays, I'll definitely let you guys know. But for the most part, when it comes to identifying order flow, the wicks, PD arrays being untapped, like fair value gaps being left open, the way that balanced price ranges operate within breakers and order blocks, how breakers and order blocks are visually showing you the balanced price range, right? How price needs to behave when it comes to those aspects of things, why the midpoint should be respected. There's, and different PD arrays, like secret ones, I can't think of it. I think there's like two more if I'm not mistaken. I can't remember exactly off the top of my head. Yeah, if I remember later, maybe I'll make a video in the Discord and talk about that. But yeah, for the most part, the wicks, that's one of the most important identifiers when it comes to order flow, and then obviously how price behaves when it comes to PD arrays. All of that has to be in conjunction with the higher time frame. If it's not, there's a problem. You're not going to be able to trust your entries. Observing the wicks and how things are behaving relating to balanced price ranges, whether fair value gaps or order blocks are being untapped, intermarket relationships, right, in the moment. All of those things assist you when you get into the market, when you take an entry, and then your ability to trust it throughout. Right? And then, of course, that in conjunction with the overall analysis concepts we utilize is vitally important. It allows trust. It allows, why should you trust this move? Because that's a huge question. Most people get in and they're just hoping and praying that their model is there just because they see a break or whatever other model they use. They just hope and pray like, I hope it works. No, you need to know. And then if it goes against you, it is what it is. But the process that we utilize allows you to know, at least with a high level of certainty, not for sure certainty, but a high level of certainty based on a bunch of data, that move could be trusted. And the more that you resonate with the higher time frame, the more that you paint your narrative on the higher time frame and understand things like the counter trend moves, when they occur, and then when price can reasonably kick back in line with whatever narrative you're observing. All that stuff is very helpful when it comes to trusting a particular narrative. And then if you're able to navigate both sides like that and get comfortable with identifying counter trend moves based on opposing higher time frame PD arrays, and then studying how price uses those levels to retrace into levels that kick us back in alignment, you can start to paint a picture and see the future as far as how you can navigate both sides. You see how people navigate both sides, buys and sells. I do it sometimes. But you can start to see how that is a possibility. You know what I mean? And it's a very fascinating thing. Don't you think the institutional order flow entry drill is like catching a falling knife? No. So again, there has to be things that are justifying why particular moves should not retrace aggressively, right? there's ways to anticipate whether price will have a deep retracement or not. And there's ways to anticipate whether a fair value gap will be left open or not, right? And that obviously has to do in some part with not power three, but balanced price ranges, and overall just how price is delivering. Is it leaving particular areas open? Like this here, right? Price used this as an institutional order flow entry drill. When you enter institutional order flow entry drill entries, also a lot of times you're going to put your stop above the candle that created the fair value gap. So institutional order flow entry drill is one of those more difficult things to engage upon unless you know if price is going, if price made like a balanced price range and why it should be aggressive. Like if we're really close to a liquidity pool, and price has presented a potential institutional order flow entry drill, a lot of times that's going to be a very trustworthy thing to operate within, and not catch a falling knife because there's a particular objective. Of course, there is a possibility for price to manipulate and kind of disrespect the institutional order flow entry drill. But if you see things like this, like you don't want to take an institutional order flow entry drill if it's too deep. Institutional order flow entry drill, at least the way I use it, I need to see one particular move that already delivered. I need to be able to potentially identify a balanced price range, aka a breaker or order block behind us. And then, of course, I don't want to be too deep into, in this case, like a discount. Like I wouldn't want to take this down to the low here. I wouldn't want to do that because it's just too deep. I like to take shorts in particular premium areas. And same with, me trying to take buys. I want to take buys in a discount. I don't want to be too deeply into one or the other, if I'm like too close. Otherwise, it's high risk. If I'm going to take it, I need to consider the fact that it could run back on me. So my stop may have to be a little larger than I want it to be, or I just won't take it at all. If it's way too deep already and delivered so aggressively, you don't want to try to force things, and you have to have a pretty strong understanding as far as why you think it shouldn't retrace, right? For example, price shouldn't get back above this because there's an inversion fair value gap in line with, like this fair value gap here, in line with the daily bearish fair value gap. So the midpoint of this daily fair value gap should be respected as an institutional order flow entry drill on this daily time frame. It should be able to wick up into it. I'd prefer it not to even attempt to get back up there. But if it does reach into it, there's overlapping PD arrays that can justify why price won't come back to the midpoint if it does look to deliver how I would like to see it deliver, which is quick. But again, we're also extremely delivered to the downside already. We're in a discount, deep discount. So there is a possibility for it to want to try to attempt to come back up. But again, our line in the sand is through this fair value gap up here, right? So we prefer it not to. It looks like it's ready to blow these lows out, right? Because it's so aggressively to the downside, there's reasons to paint why it shouldn't come back to the midpoint. So we'll see if that's going to continue to be trusted. If you look at this monthly range here, right, from the low over here to the high, the extreme high, based on that monthly time frame. Okay, you see the monthly range. If we go down to the daily time frame, we can see how equilibrium for that is here. So it's just slightly into, well, I guess it's again in a deep discount. So there's a likelihood for it to want to retrace. But since we're so close to the particular low down here, it may not, right? It may not come back into a premium level based on that range I just identified, right? So when price does retrace in here, depending on how it behaves in here, I can use this as a framework, right? If price uses this as an institutional order flow entry drill, meaning that it doesn't even attempt to get back at all close to this equilibrium right here from that monthly range, and doesn't even attempt to get back above this daily fair value gap midpoint, and doesn't even attempt to hit this inversion fair value gap I have highlighted, and it just starts to deliver, that's beautiful, right? I can use the higher time frame identification of the institutional order flow entry drill model or any other model, and I can use that as a framework to confirm a particular narrative aside from all these other things that we use to paint a bias and narrative. So you can use higher time frame frameworks using other models or particular models, even your normal model that you use for entry, and you can use it to justify and add confirmation to your overall narrative analysis, which again, that's what we do on a weekly basis on this YouTube channel and in my private community, right? But yeah, when it comes to institutional order flow entry drill, for the most part, every institutional order flow entry drill that's outside of a premium, if I'm looking to short, or outside of a discount, if I'm looking to buy, it's all half risk. And the fact that there's balanced price ranges, the behavior that price is showing, is it leaving fair value gaps wide open and not even coming back? Are we close to a particular PD array? All of that will help justify or confirm whether that institutional order flow entry drill entry is going to be something worth participating in. And again, it's one of the hardest things, similar to turtle soup entries. It's those are two of the hardest things to engage upon because you have to have a decent amount of background knowledge, and there's always a risk of it turning around on you, unless you have these other things like overlapping PD arrays like this that can justify price not wanting to come back to the midpoint and beyond the fair value gap you're trying to enter when it comes to institutional order flow entry drill. All right, so I hope that makes sense. But yeah, I'm not expecting price. I'm expecting price to give us an institutional order flow entry drill here. I can afford for it to come back a little bit, but again, if we start blowing past the midpoint of this, if it is going to blow these lows out, I don't want to see a deep retracement. So we'll see how that operates to start the week. I would like to blow these lows out before it looks to want to maybe turn around. But again, if the yields fail to go lower and they just start rampaging higher, that may be the reason why this low does not get blown out. So it's something we're going to monitor as well. But yeah, for the most part, these are the overlapping levels we want to see that justify why price shouldn't come back up there and break the midpoint. We don't want to see this fill out entirely because look, there's already buy side delivered here aggressively. Shorts have been delivered aggressively too. So if it is going to continue to want to blow these lows out, it's very reasonable to classify this particular area as balanced, right? And that's further proven if price can't even dig into this at all and it presents us with a institutional order flow entry drill. There's another little nugget to help you identify whether a particular institutional order flow entry drill is going to deliver properly. When it's delivering through and balancing a particular area, right? There's very one-sided delivery here. Once price got down into it, delivered very one-sided again. So it shouldn't have any reason to want to come back in there because this is classified as a potential balanced price range. Again, if it does blow through it and gets up above here, then obviously things may be different and may change. Otherwise, if this continues to support what I just mentioned by not even attempting to aggressively dig into the midpoint here, that should justify us blowing out this low with little to no retracement, aside from the particular power 3 we could potentially see, which could present us with a small little retracement. Again, it may pause and stall out because, again, this liquidity pool is massive. So they may use CPI this week to blow that out. And then, maybe at that point, the yields start to expand aggressively to the buy side. And then maybe that will drag us to the buy side as a result of this particular higher time frame low being taken. But obviously that's a little bit of forecasting. We'll see if that takes place. But for the most part, the overall view of what we're looking for going into this is we want to see price retrace a little bit into here, at least attempt to blow some of this out. We want to see it fail and then start to attack the sell side. And then, of course, whatever it does down here, we'll make decisions on once that time comes. But before that happens, we need to see some type of retracement, possibly set that move up so that we can be confident in attacking that timing-wise. Okay, and we don't want to see it break above the 50% level here, which is the equilibrium of that monthly range. Okay, so we'll see if that has any type of importance, right? We'll see. So yeah, we'll favor downside DXY until proven otherwise, because that's it's just the way it is. This is the way it goes. We have all these different things overlapping, showing us that there's no reason to think buys just yet. we'll be catching a falling knife for trying to buy, and price just goes up and then, blows these out. It's too close. It's too relevant at this current moment. Okay, so yeah, that's my opinion on DXY. So with that being said, we kind of touched on a little bit of the indices. We're going to get through this, and then I got some other things I want to mention. Some very important structural information related to your process as a trader, But yeah, so as prices delivered through this, it's fulfilled particular levels we've been observing, bullish order block. So there's now, again, as I mentioned, when opposing PD arrays are met, here's yet another example, right, of price hitting an opposing PD array, using that opposing PD array to respond against what price has overall favored. In this case, it's been favoring downside. This PD array here, opposed to that, has now triggered in price wicking off of it. Right? It's given a response against the sell side delivery. All right. So going back to what I mentioned about the wicks too, look at how price respected the wick. That is just as powerful of a signal for continued movement in this particular direction, that direction being bearish for this. It's confirmation just as much as a fair value gap that gets left open. Very strong signature providing evidence that this is extremely interested in offering sell side delivery. You can see here too, this is a 3-day chart. You can see here that there's relative equal lows. Okay, if we move up a little bit more, you can see this very large down wick. Notice this large down wick. Okay, midpoint. Look how perfect the delivery is. This one too, down wick. Perfect. Couldn't even reach up into this upper range wick. Right? Notice how perfect that is. Power 3, right? Went up into that. So again, we're going to open up this next week, seeing these equal lows here, right? There's a fair value gap there. We're going to favor this still continuing to drop. But again, we need to see some type of retracement because the correlation effect, at least for the time being, has not been in line fully with the DXY and the indices. They kind of been moving together. So again, we're just going to continue to monitor when that kicks in alignment. And our risk is dropped. It's been dropped since we observed that back at the start of February in terms of the crack and correlation overall. So we're going to continue to have that cautious risk model approach, knowing that we are in some pretty chaotic times. It's not a time for you to go in and just start throwing a bunch of trades and over leveraging and over risking, because you're going to get blown out. You're going to be whipsawed by the aggression in terms of volatility. So obviously there's ways to observe opportunities. We've pointed it out all through February up until even this last week. It was a little more hectic and chaotic last week, but nonetheless, there's been opportunities. Whether they're your opportunities or not, obviously it's a personal decision because you have your model and your rules. Just because I say buy or sell anywhere, if it doesn't agree with what you're doing, you need to use it as a study, and then try to see if your model can make sense of, what it is that I'm describing to you. And then, of course, if you use a very similar model, then, maybe it's something for you to make your own decisions on, obviously, first and foremost. But, yeah. So, yeah, going into this new week, we're going to continue to monitor this, as I've been mentioning. Again, we have this fair value gap that's set equal lows. I definitely want to see if that's going to be what price is going to target. First and foremost, though, just like we talked about with the DXY, I want to see a retracement first, study the behavior at this wick here, the midpoint, and then see if it can deliver away. You can see buy side and sell side has been very consistently delivered in here. It hasn't left really any gaps available. It's been really efficient throughout this whole delivery to the downside. So we'll see if price really wants to do much of a retracement before it looks to maybe blow this out down here. Go to the 3-day. Again, we see the fair value gap here. There is a fair value gap in here. And then, of course, we have this fair value gap in here as well. So yeah, because it's been so aggressive, I wouldn't be surprised if it does retrace. If it does, I mean, that's what we want to see if it's going to be bearish this week. We have, again, this down wick I've been mentioning. We have this bearish order block. You can see how that's been respected. Price couldn't even get up into the midpoint. So this order block is a balanced price range, as balanced price ranges are, right? And how the rules are structured around balanced price range delivery. Midpoint of the balanced price range was respected. From this low to this high created a balanced price range, right? We were mentioning that as well. As this was delivering, once it got below this low, I said it would probably leave this and not want to come back into it. That should act as a balanced price range. As you can see, it beautifully delivered. As a result, though, you can see all of this has been very solidly delivered. There's no gaps in this area. So again, we've pretty much blown out a lot of the sell side. So I would not be opposed to possibly framing out price giving us a retracement. We're inside of that higher time frame PD array as well. That let me see where the weekly fair value gap. There's a weekly fair value gap plus this bullish order block. So this is going to be the narrative that paints against this and presents us with counter trend ideas. And if it is going to continue to drop, we go into the week knowing that it's probably going to go against the overall assumption. We need to see that in order for us to know that work has been done, so then when it kicks back in line with, in this case, the downtrend, we can be assured that there's been work done and losers have been engineered, so that we can ride the coattail of smart money's delivery, possibly targeting these relative equal lows I just mentioned on its way to the fair value gap that we have that's of interest. Okay, let me paint that. So we got this daily fair value gap in here. So that is going to be the potential next target. I'd prefer to see if we can get back below this. This is technically a order block, a bullish order block weekly fair value gap combination here. So again, it's very reasonable for them to have delivered all the way, taken out these stops, and now we're in a moment of retracement. Because again, opposing PD arrays, in this case for this downtrend, will present us potentially with framework for a counter trend idea. And we could see that's in effect here. As you've seen through all these assets we've looked at, me describing this has been very apparent and very obviously shown in each of the assets. So again, it's just one of those repetitive things. And if you didn't know about it, now you have one more piece to clarity in terms of price navigation. All right. So yeah, I'd really like to see if we can stay below this wick and then continue to drop. We'll see if this order block is going to continue to hold, or if price is going to want to try to retrace a little bit more aggressively as a result of this bullish area being attacked. Again, we did leave these equal lows, so there's a fair value gap available. That will be the target if we do see evidence that it wants to drop. And Sufi, you have a question? Go ahead and ask. Why take only the single last down candle or up close candle on the higher time frame as an order block, but take a series of up close candles? So those series of last down candles or last up candles on the lower time frame are the candles that create that higher time frame candle we observe on that higher time frame for an order block or for a breaker, for example. Those lower time frame consecutive candles create the parent time frame when you go from one time frame to the next. Like if I'm on a 5 minute and I see 3 consecutive down candles, those 3 consecutive down candles on that 5-minute create that 15-minute bullish order block. And then as you go up in time frame, it's the same thing. If you see 2 consecutive 15-minute candles going to consecutive down candles, if you go to the 30-minute, those 2 consecutive 15-minute down candles create a 30-minute bullish order block. If you have 2 down candles, 2 consecutive down candles on the 30-minute time frame, that creates 1 hour bullish order block, so on and so forth, right? So that's why you look at consecutive candles on the lower time frames, but it generally results in just one for the most part when you move up in the higher time frame hierarchy. Okay, wanted to confirm it with you. Yeah, for sure. That's another reason why I'm here. You know what I mean? I don't know everything. I don't claim to know everything. I'm not perfect. But I've put so much time into this, and I do know a lot about a lot of things, you know, and so yeah. Nobody can ever claim that they know everything. So if they do, you should ignore them because they're just trying to sell you a bunch of nonsense, you know. So yeah, I appreciate the question because I'm sure a lot of students have that question too. I know I had that question. But yeah, so again, we got to consider the fact that we're going into a new quarter that's coming on the 16th. We're assuming that, you know, prices declined. It's swept out the lows. It's very good observation also to think about how price has behaved since we have taken out the sell side here. But if DXY is going to find its legs and try to run higher in any capacity, alongside the yields, if they do provide evidence they want to go higher, then you know, we'll see price continue to favor the downside for the indices. At least for now, it's in a state of, you know, I want to pull back, right? So we'll see how things like this fair value gap are going to hold for the S&P. We'll see how price behaves here. We have a down wick here on this weekly chart, so I wouldn't be surprised if it was to pull back into that. But until we can see price give more reasonable, strong delivery to the downside again, we're going to be in a thought process of the narrative is bearish because that's what it's been providing. We've hit an opposing PD array, so now the bias within that narrative is now supporting price going against it, right? It's going against that downtrend. So the narrative is overall bearish still because, I mean, clearly it's very obvious it's going down. Because it's taken out opposing liquidity on the higher time frame, it's reasonable to see how this is retraced like this, right? It's not just going to go one-sided all the time. It's going to attack liquidity, then come back against it, sweep up the other liquidity, and then if it's going to continue, it's going to continue. Or it'll start showing evidence that it finally wants to turn around. And then, of course, we justify using other assets and these concepts we've talked about today as well as from the last couple of years, right? And then for some, you've been watching for the last couple of months, you know. So we'll see what happens. Preferably, if it is going to drop lower, we want to see this retracement here start to fail, and then of course we want to see these levels we have above us continue to show resistance and hold price. But if, of course, if things start to change, then we'll be right there to adjust. For the most part, we're inside of a retracement. If we do want to see downside delivery, we want price to run higher. Okay, and then where it runs higher to, we have a down wick here. We could even use, we can use some of these other time frames, 2-day, 3-day. Look at some of the wicks, see what overlaps. We have this up wick here. We'll see if that continues to be respected. And then, of course, we have that fair value gap I mentioned down here for the NASDAQ. But overall, we're going into the week starting with an assumption that price is going to retrace to then want to favor going lower, because that's what we've been seeing get favored, you know, until it's proven otherwise. What proves it otherwise? If we go back to the NASDAQ here, my line in the sand for price continuing to drop, here, let me clean this up a little bit. My line in the sand is going to obviously be this order block, and I'm 100% confident that this downtrend is over, if this high is violated. Okay, so I'm totally fine with trading half risk, reaching up into that, unless, of course, it proves that it finally wants to respond off of that and then eventually hit this downside objective here. We've blown out so much sell side here. It's been pretty incredible. So because that's the case, there's been a ton of people trying to push sells now. So I wouldn't be surprised if they look to pull price back up a little bit, cause a little bit of pain, then look to continue to drop if things are going to continue doing this because of the response off tariffs geopolitically. And then this retracement is also instigated by March seasonality being potentially bullish. So we may get some type of interest to the buy side inside this downside delivery we've seen. And then, of course, we'll see if that's going to extend itself to go higher. If it violates the high up here, we have inversion fair value gap here, right? You don't really see any other impactful things on this time frame, but we have this inversion fair value gap. We have a bearish order block. And then we have these wicks in here too that should be able to hold price. And then, of course, if all that's violated, once it breaks above this high here, I mean, it's very obvious to see that that is no longer interested in sell side delivery, at least for the time being, if that takes place. Right? So this will be my final line in the sand. I start getting real skeptical that shorts are going to take place any further if we violate the midpoint of this order block. Because remember, 3 PD arrays being violated opposed to what you're looking at. In this case, we're looking for shorts. If 3 PD arrays are violated to the buy side on this higher time frame, that makes it so we cut off any type of short ideas and start to adjust and start to think about what price is going to do to the buy side. And then we layer things with the other assets we observe and see if we can cement a particular idea related to price adjusting from one direction to the next. But we don't disregard the downside narrative because narrative doesn't change on a day-to-day basis. We have to have something dramatic change the narrative. We're going into a new quarter, so that may in fact become the case, right? The second quarter being entered into may result in this turning against the downtrend that we've seen and break above this high as a result, presenting us with a shift in the quarter, right? A quarterly shift. We can also justify that potentially with this SMT if this stays intact as well, in conjunction with a strong move that gets above this high going into the new quarter. That would also highlight the importance of seasonality, right? We don't assume that. We don't force our will. You can see how I'm talking about this. We're waiting for certain things to take place. And if it wants to retrace up here, that's cool. I could frame a setup off that. But if it responds away from that and fails to break anything significant, we also have the equal lows down here as well. At first, I'm going to favor price retracing, supporting the downside direction, see if we can blow out these lows. But if that fails, our contingency plan has to do with this high being violated. If that high is violated, midpoint of this order block is violated, and the inversion fair value gap here is violated, all of that justifies a quarterly shift taking place in conjunction with the bullish seasonal tendency going into the new quarter, also justified with this SMT at the lows here. So you see how one thing leads to another? You see how we continue to trust things, and price, if it trades against shorts, obviously we're going to have half risk until we can justify that the narrative has changed. Narrative hasn't changed. You can try to pick this bottom, but we don't pick bottoms. The process I just mentioned there is why we don't pick bottoms, because it can easily continue to be a falling knife. Because if something hasn't dramatically changed structurally, you're not fully in an adjustment, right? You're not fully in a change in the overall state of delivery. All right? So this is very important because you don't want to be a flip-flopper, and you got to understand the time of year we're in. We're going to adjust, possibly. We're at a time where we got to see what price is going to want to do. We have contingency plan, right, which is this high being violated, disrupts this whole downtrend. And unless that takes place, we're going to continue to try to favor shorts because we now have equal lows down here. But again, if that gets left, We have an argument also, if price does start to rampage higher, we also have an adjustment and validation for with this SMT holding price below at these lows, if that is to take place and go against the short idea. And then, of course, seasonality, like we mentioned earlier, is also used in conjunction with that contingency plan if it does prove that it wants to do more than just a small retracement. Okay, so we favor price opening going against the shorts. Want to observe how price is going to behave. Monday is going to be classified as low probability, high resistance because there's no news. It's ahead of CPI. We don't want to do a ton given the fact that, anything can happen. CPI can also be used to change the state of delivery from bearish to bullish. So CPI can also justify using the economic calendar as a possible macro or reason for institutional sponsorship to take place. It could be the reason or catalyst for price to get up above here to change the state of delivery. Because that is a possible risk, we want to make sure that we are very calm. We have all these things that we talked about today that paint an overall very detailed narrative, both in terms of why price could continue to favor the overall narrative currently, which is to the downside. But then we also have some layered things on the back end like the SMT, the seasonality, and the potential overall quarterly change that can be instigated by CPI if we see CPI run up above the high here, or if it fails to do that, CPI will probably be used to come down and justify a run below these lows. Now, whatever happens below that, we're going to have to see what takes place. We're so close to the quarterly adjustment. That's within this week or next week, right? So again, the week before, week of, and the week after, you got to remember that things could change dramatically. So we want to make sure we keep these things in mind. Okay, so I hope that my assumption as far as what we're favoring going into the new week is clear. If it's not, just let me know in the comments or in the chat. Again, if you guys get value from the video and all the things that we do, definitely don't forget to like the video, share with your friends, and do not forget to subscribe and hit those post notification bells so you can be notified if you don't get some of the announcements I do ahead of time. Or if I wake up late, right? Like today, I woke up a little bit late. But yeah, I think I did a decent job letting y'all know, right? So, but still, just in case. But yeah, so with all that out the way, let's move on to what I was talking about earlier. No worries, Daniel. Appreciate you hopping on, brother. Sufi, appreciate you too. Tony, appreciate you as well. But yes, so let's get into what I mentioned earlier, if I could find it. Okay. Oops. All right, so looking at these particular topics here, clearly it's in the beginner topics in my private community. The way that we frame trading development out in this community, the way that I've come to organize my plans and processes, and then of course the way that I teach the students that come to me in terms of my private community, and even a lot of the things that I look to promote here on this YouTube channel, it's organized in a very specific type of way. Okay, it's organized into 10 different subjects. Okay, what I've come to realize over the last, many years at this point, when it comes to my own personal self-reflection, my own personal experiences, the way that I view trading development from my own perspective, and then of course, with my experiences in terms of teaching others and hearing their struggles and what helps them the most, this perspective and experience has helped me realize how to make trading development and personal analysis, I guess you could call it, I've learned to organize it in a particular way that allows you to identify your strengths and your weaknesses. And each category that you see here on the screen, any issue that you come across, any problem that you end up dealing with, any strength that you end up developing or understanding that you have developed, all of them will fall into one of these categories. Okay? These upper areas up here, these 10 different subjects, if you have an answer and a process that's repetitive and repeatable relating to all 10 of these, because there's subcategories involved as well, which I get into great detail with all my private community students that come to me asking for this type of education. But if you can come up with a basic answer to any of these topics or to all these topics, you can confidently move forward in your development knowing that you have an answer to majority of the questions. You have now, once you master all these things as well, you have a way to analyze your strengths and weaknesses. Each weakness will fall into one of these categories, each strength. For example, just so I could paint the picture as far as why this is so valuable and why this has been so helpful to many. Mindset and expectations. I mean, that should be kind of obvious with the way that I talk about things on this YouTube channel. I mean, a side note, right? You look at what's being shown here, you can understand why I operate the way I do when I'm live with you guys, why I emphasize specific things so often, so much, over and over and over again, because I'm, in a way, kind of, trying to position you guys in the right mindset, get you thinking about the right things. We talk about mindset and expectations every week. We talk about time, the importance of time using the economic calendar, higher time frame view every single week, macros every single week, risk management and mitigation process. I give you guys a couple of things every single week. Of course, there's more depths that we can go into all these topics. They get real deep. But for the most part, a lot of this stuff I try to mention, in some form or capacity on this YouTube channel and in our engagements together. The reason, mindset's important is because if you come in with a shit mindset and a totally opposed perspective on things versus what the realities are, you're going to make a ton of mistakes and not be able to maintain yourself through the hard times that are inevitable, that always come for everybody. Okay? And your expectations and how you view targets, like I've mentioned a couple of times, like look at your targeting as, okay, I want to replace my job. But before you get to there, you want to replace part of your income at your job. Then, of course, aside from that, maybe you want to pay off a bill. That should be your target. You shouldn't be aiming for $20,000 a month. You shouldn't even be aiming for $5,000 a month, $6,000, $7,000, $8,000 a month. You shouldn't aim for anything like that. So again, it goes back to mindset and expectation. You got to cross one bridge before you get to the next. So obviously that's something that's laid out from the get-go when it comes to anybody coming to me for any type of education or help or guidance or anything. So that's number one, right? Then we got time and kill zones and macros. Aside from those, right, you have the economic calendar. The importance of that is very, well, if you've been in ICT concepts or in the ICT sphere of influence, you understand why time is so important. You have to understand why time is important too. You have to understand what times do what characteristics in a daily range do what each day does inside of the weekly range, right? What each week does within the monthly range, right? It gets real deep in terms of time. And it's so important. Mindset and time, you could see why they're two of the most, they're the earliest things that we end up talking about and why I talk about them so often. Then, of course, risk management. I mean, that is a non-negotiable. All these are non-negotiable. These are 10 non-negotiable things that you have to have answers to eventually. But when it comes to risk management, all things that you learn, if you don't have a risk process, if you don't have the right mindset in conjunction with knowing what times are the best for you, and then at the same time having your risk protocols for specific days, specific weeks, specific events in the marketplace, those things are non-negotiable, because if you don't have those intact and understood, how can you expect to be consistent? How can you expect to trust yourself that you'll be safe in the marketplace? How do you know when things are more trustworthy than others? And if you have horrible expectations, how can any of this stuff be glued together? How? This is only 3 things. If your mindset's messed up also, some of the issues you can come across is over trading and over leveraging, right? That could fall into mindset. Maybe your expectations are super far off. They're not aligned properly. Maybe your timing is off. Maybe you're entering in the market and you get stopped out early, but it goes in your direction. That falls under time, your time engagements of when you're choosing to take a trade. That may be showing, if that's happening over and over, that may be showing you that your bias and your analysis to identify direction is actually pretty accurate. You're just having some issues with timing. Again, if you're over trading and over leveraging, that falls into mindset and expectations and risk control. So you can start to see just off of this small little piece of explanation here, you can see how this categorization of particular skill sets in the marketplace can help you frame out issues and where you need to work on things and why these things are so important. And then of course price navigation, right? Higher time frame to lower time frame. That's what we do on a weekly basis here to help you learn how to navigate price, how to feel confident in navigation of price, why certain things should happen over another. What is more likely, right? Like if price is so aggressively moving in one direction, what is more likely? How can I navigate it from PD array to PD array, from internal range to external range liquidity, retracements, premium and discount? How do I analyze that, right? How each time frame works within, how each lower time frame works within the higher time frame? How different concepts are useful across time frames, Power 3, any of the other models, how they show up on every time frame. So there's the importance of that. If you don't know how to navigate price, you're going to have analysis paralysis. You're going to be lost. How do you know what areas are important? And what areas should be thought about? How do you know what the delivery will be or what can be expected in terms of price navigation from PD arrays to PD arrays, liquidity to liquidity, fair value gaps to, other PD arrays or things like that. The fractal nature in price, that's also something important when it comes to price navigation, right? How the higher time frame looks on the lower time frame, transposing higher time frame PD arrays to lower time frames. And then of course, one of my favorite categories is bias and narrative. I give you the answer to that every single week, that specific process, how to master bias and narrative. Okay? It's every single week. Everything that we do is literally labeled in terms of the titles of things, right? It has to do with something that has to do with bias and narrative. And most of the time it's repetitive. I'm doing the same things every week to give you the answer on a silver platter, how you should operate when you're looking at bias and narrative. Validation, invalidation, right? Points of interest, identification, SMT. We talk about SMT from time to time too. We just talked about quarterly shifts and how quarterly shifts in SMT and higher time frame intermarket relationships can put you in front of things in terms of identifying quarterly shifts. Mix that with fundamental seasonal influences. I don't really talk about COT that much here. I talk about it a decent amount in my private community. But all these things have a place, and hopefully you're starting to see that. Then price models and framework, right? Counter trend ideas we talked about today. That's a framework I gave you guys for those of you that may be looking to learn how to frame out counter trend ideas because maybe you don't trust catching things in the moment in a trend. Maybe you don't trust it because for whatever reason your mind doesn't click with that. Well, now those traders that like to be opposed because they're scared of it continuing, now you have a decent understanding of how to frame that out. It's going to take practice still, even with what I mentioned. But the more you practice it, you now have a framework. Price models. Here, when you see me do any type of entries or talk about any entries, I use 4 trading models, for those of you that don't know. I use the breakers. I use market maker models as a framework on the higher time frame, as well as an entry tactic. I use institutional order flow entry drill, and I also use the 2022 YouTube model. All of those specific models and frameworks, because there's also Power 3, which is a framework, can sometimes be used in conjunction with market maker models. But every single one of those models has been meticulously planned out in terms of being able to mesh them together, because they overlap in many cases. There could be breakers and there could be breakers and YouTube models and institutional order flow entry drills inside market maker models, which can be working within a weekly Power 3. Right? So all of those being the case, right? That being the case when it comes to models overlapping with one another, that the fact that things are fractal, you could use some of them as frameworks. You can use some of them in conjunction with the framework to have an entry tactic. You can use them on every time frame. Just the simple fact that all those models mesh together is something that I show within my private community. And in many cases, I show it here as well. When I'm engaging, these are things that you want to think about. I've made some videos about market maker models. If you guys need me to talk about the YouTube model, I personally think, aside from all the other models, ICT has done a wonderful job teaching how the 2022 model works. And then, of course, breakers. I also show how breakers also have the YouTube model working in conjunction with them. And if you can identify a higher time frame breaker, you can find the YouTube model presenting an opportunity before a breaker forms, because in a lot of cases, that's the case. But I say all this to say that you can develop a very complex way of meshing things together with multiple models. You don't have to. I'm just mentioning my own personal view for those of you that don't know. And some of the value you can get from watching what it is we do here, because it runs deep. I try my best to keep things as simple as possible, as digestible as possible, always giving credit where credit's due to the one that made all this possible, which is ICT himself. But then the luxury ICT gives us as his students is you get to a point in your learning and trading career where you could start to build your own processes. This is a unique process to what it is we do here in the WMG trading community. Not everyone uses the same process. Some stuff will resonate with others more than it will resonate with you or me, right? Some will use fundamental analysis, some won't. Some will use multiple models, some won't. Some will use the same models, but find the opposing direction. I could catch buys, like in many cases, with my students. I catch one side, my student Harley or any of the other my private communities students can use, the other side, all inside the same framework, But I say all that to say that it can get real deep, and part of the value of being here, and part of the reason why this is a mention in this list, is because your model becomes personal to you. And I show things in a very, with a wide net, because not everyone's going to be able to learn one model or the other. But I've been fortunate enough to be able to mesh multiples of them together, learn all the rules to each aspect of them. So I have a deep knowledge of each of the different models. So depending on what the student wants to utilize and what sticks with them, they can either see it in my analysis from YouTube, or we go and make a personalized, deep approach when it comes to the private community and trader development process that each of my students go through, right? But I'm laying all this out also, just to slip this in there. I'm laying out this entire trader development framework, so you guys on this YouTube channel can also think about things in this way. You could start to think about, okay, there's a way for me to start identifying different categories of skill sets in my trading. So if I have an issue, I can start reasoning with myself as far as where the issue is and what I should really focus on. Because if you lose a trade, there's a laundry list of excuses we like to make. There's a laundry list of criticisms we like to put on ourselves that, and for the most part, don't really highlight where the real issue is. This process, this categorization of specific skill sets that create the trader, assists you in that identification process when it comes to your issues, and it also helps you organize your trading plan. Yes, it's been mentioned before that a trading model should be able to be placed on a business card. Yeah, a trading model. Okay, your trading model isn't your whole plan. Okay, your trading model is your entry, what you use to make a decision. All right. And then, of course, there's other skill sets. If you want to be a dynamic trader that does this full time or supplements an income or does something spectacular with your skill set, you're going to want to be very educated on it, on multiple different skill sets. As a trader, we do many things. It's not just us finding entries. We do multiple cross-reference analysis. We do fundamental analysis, get a feel for the heartbeat of the market. We have a bunch of different things that help us validate or invalidate a particular idea. We have to deal with the ups and downs. We have to have the right perspective and expectation. We have to have guidance as far as what that is. Okay, then we can, end up having that knowledge on our own. We have to also identify how to target. What's our risk protocol? And so much more. So being a trader encapsulates the vast skill sets we have to acquire. Patience, discipline on top of everything else, managing our personal lives, separating our performance from emotional to process-oriented, which this process helps highlight and helps you start to organize. So again, all this stuff is being mentioned here so you can kind of see the inner workings of what it is that is provided here in the WMG trading community. What separates us and what separates me as a mentor from everybody else that tries to teach this stuff, And again, no credit gets taken away from ICT because, again, he revolutionized my life and the same as he has with everybody else. But I'm grateful that he gave us the opportunity as his students to go on and make our own path, to create our own systems in the marketplace. That's why he has so many models and different things and so many pieces of information. You go in, find what works for you, create your process, and it's unique to you. He says he doesn't ever want to take the credit. This is why he says that. He wants you to obviously say that, order blocks and this and that are his, because clearly they are. He created it. It was never around. People try to say it's Wyckoff and all this other dumb shit, but go and study Wyckoff and tell me that there's regular trading hours gaps and all these other things, and look at the logic and how these concepts are utilized and cross-reference them with these other people. It's very obvious if you spend any type of thinking and deeply dive into these things and how stuff works. It's unique. It's unlike anything else. I've studied so many different strategies. I've looked into Wyckoff. I've looked into all these different things. It's unlike everything else. And there's new stuff being pumped out every day that nobody can explain. You can't encapsulate this stuff with anything else. Nothing else gets as detailed as this at all. Now, one person has mentioned macros. Who mentioned things like macros? Right? Who mentioned anything like the things that we talk about and have been able to discover? Who? Aside from him, he's been doing this for 30 years. I mean, that's enough time, especially since he's been doing it since back then, and he was full-time back then before he even made a course. Who back then had this type of skill set? He has, in his private communities, he has people that work for banks, that are traders for banks. They just don't say anything. And he's mentioned it before. And people have even called him out and blocked him and then started using his vocabulary, who work for banks, which is pretty fascinating. Goldman Sachs has attacked him and said that there's no making money on these seconds or lower time frames. You have to be on a higher time frame. ICT and his students, that being us and others, have came out and proved it, that that's total nonsense, that they don't like him because, he's showing things that they can't do. So again, that's all to say, this stuff is unique and we have the ability to create our own path forward, our own stuff that we can call our own. that doesn't take away from the fact that he created these things. This right here, what I'm showing you guys, is an example of how I've been able to have that opportunity. And this has also came and helped other people, other students. There's a reason why we're correct more than we're not. Yes, we take losses. We're not perfect. I will be the first one to say I'm not perfect. None of you will reach perfection as a result of learning from me or ICT or anybody else. But again, at the end of the day, this stuff is unlike anything else. And the ability that we have to create our own like you'll take some of the stuff from me and go out and create your own processes. Maybe something works for you that doesn't work for me, or vice versa. There's some stuff that's universal, right? Like higher time frame analysis, and a lot of these things are elements that we have to have in our trading in some capacity, right? They're just the foundations of a overall structured plan, and it's organized in a way that allows you to identify your problems. So then you can go in and see where your weaknesses are, what category they fall into, so you can start focusing on them versus trying to adjust shit that doesn't need to be adjusted, right? But this stuff is unique, and you will create your own. And even this, me organizing things in this way, allows for even my students to create their own path forward, using certain structural principles and foundational pieces of knowledge within the ICT sphere of influence, right? But again, it allows you that experience to build your own thing. It's like building blocks that you put in your own formation, you find your own model, right? Even if you use the same model as me, you'll find your own way of using it. You'll have a different time frame than me. I trade on the seconds chart, sometimes a 5-minute. I frame from the higher time frame. Maybe you just stay on the higher time frame. That creates a particular model special to you. The way you utilize the different skill sets you learn, right? If you organize them in this way, there's ways to do things a slight bit different. There's different assets you can observe, right? There's different models you'll use. There's different frameworks you'll like to operate within when it comes to your model of entry, But a lot of this stuff like price navigation, validation, invalidation, POIs, since we're all ICT traders, the bias and narrative way of analyzing things. I mean, not everybody does it this way because they try to say it's complicated, the way that we do it every week. All right, that's okay. That's totally fine. Again, to each his own. But the results you see, you make a determination as far as whether it's, worth the, slight bit of extra complexities or not. Higher highs and higher lows always is there. Keeping things that simple, it's always there, but so are the 90% of failures. And of course everything is encapsulated with risk management. So again, some of these things are non-negotiable, but again, these things allow you to create your own model aside from the things that ICT teaches. It's all influenced by the things he's taught. I wouldn't have been able to create it and find my own way, create my own systems if it wasn't for the fundamental components that are taught by that wonderful man, right? So yeah, we got through price models. We got there's like an issue here as well. If you have too many models, here's a thing that's very important too that I didn't mention. So when it comes to price models, right, you want to keep this stuff in mind, but you want to keep them as basic as possible at first until you start adding more. If you add more, you don't have to. You could just have one model. But if you have multiple models, right, say you're taking a bunch of different entries. Say you're taking breakers and a YouTube model and optimal trade entry and turtle soups and whatever the hell else you want to add on, thinking that that's helping you, right? If you're taking a bunch of different models and continuously losing, right? And you're taking different models every time you take an entry, supposedly, that's going to fall into an issue. Where does that issue align with? If you're not over trading or over leveraging, that's not a risk management or mitigation issue. Maybe it could fall into price navigation and maybe bias could be an issue. But if you're using multiple different models and you're failing because each model's not being profitable, right? If you're taking random stuff every day, a breaker, a YouTube model, or anything, you're not sticking to one, and that's resulting in a bad result, that falls under you having a price action model issue. a price model issue, maybe framework's off. It can also fall into a timing situation. Maybe the timing's also an issue. So you can categorize that issue as well. So you can see, just off what we've been talking about, how this little organized list of topics, right? They all have their own subtopics, but overall, this overview of topics helps you push things into a particular category, so you don't change your risk protocols because your price model is having an issue, right? Or your daily bias idea won't get changed because you're over leveraging and over risking. Because again, this is an issue. People think, let me just change everything because I had a bad week. And that this allows you to know that that's not needed. You could separate and identify where your current issues are, and it can help you start to adjust. And of course, this is a heavy thing that we focus on in the private community. Obviously, it's very personal. That's why my community and my private community has remained small. Not everyone is accepted into that because you need to be serious. Because obviously, me as a mentor, it's a lot of investment for me. And if we have my time wasted, so I refuse to do that because I know how effective this is. And signal junkies, I don't like the signal junkie vibe. And signal junkies, for a fact, once you lay this out, they'll get off the call. They don't engage. They just, what's the signal today? And I don't condone that at all. And quite frankly, those that actually trade well, unless they're selling a signal service, which I provide signals, but it's not dedicated to signals. You don't come expecting me to throw 500 signals at your face, even though I do that sometimes. But this process allows you to see how I've gotten to where I'm at and how it'll help you get to where you're trying to go. And it'll also allow you to have your own process. It allows you to analyze yourself for those that do take this serious, that want to improve, that want to be a professional. You don't go to a professional job acting unprofessional. Same with this. You don't go into this trading business and act like a impulsive gambler who is just trying to win the lottery, okay? Or find someone else that's possibly going to win you the lottery. You won't gain a skill set off that, and those people end up quitting in 90 days because they blow 90% of their money 90% of the time. So this just shows how deep you can take things, right? And then, of course, training plan development is you developing this process, you continuously observing this until you settle in with something that you truly resonate with, your process of development, your planning on how you're developing this. What are your processes? What are you doing on a daily basis? We can kind of mix this with routines as well. But, this is kind of like the things that you're doing to kind of audit what it is that you're trying to do here with each category, right? How are you improving? That could be also related to how you're improving your mindset. It's just analyzing certain things. So it's just something there to assist you in, being reminded that you should be really paying attention to each of these categories. Okay, so training plan development, different components, and then point of interest identification, validation, invalidation, and trade management. We talk about that on a weekly basis in terms of validation, invalidation. I've laid that process out pretty clearly. You could see that a lot of these things I've mentioned on the surface level. I've mentioned it to get you guys thinking about certain things that are so important. Then, of course, targeting, right? What is your targeting? What are your objectives? How are you framing out your targeting, right? How do you target, right? What do you target? Then, of course, POI identification here also kind of goes with liquidity. Liquidity identification. Not sure why I didn't add that because when we talk about that, I spell that right? Yeah, all right. All right, so this has to do with points of interest, what I do on the higher time frame, how we look at previous week's high, previous week's low, previous month's high and low, previous day high and low, all the lower time frame points of reference as well that I've mentioned a couple of times on YouTube. I'll probably have a PDF about that as well in the near future. But all that stuff helps you navigate points of interest, right? PD array matrix, liquidity, right? Like I just mentioned, and the list, and then validation, invalidation, trade management. You could tell why this is important. Like if your targeting is off, right? If your point of interest identification is off, like you aim at one thing, but it never goes to the place that you're looking for it to go into, that is classified as a point of interest issue, right? If you don't know how to navigate liquidity, right? If you're just randomly getting whipsawed all around and you can't accurately be able to identify the liquidity, we have a process for that. It relates to the list of liquidity I give all my students in the private community, and then I've mentioned it a couple of times as well on YouTube and in the free Discord. How to navigate all that. Again, that's one of the pillars. All these are 10 pillars to our process, our unique process here in the WMG trading family, right? And again, it helps us identify our problems. It helps us create an organized process. So again, once you have all this stuff nailed down, once you have a process for all these things and you understand each element, you have no choice but to accept the fact that you have an organized process. You know what you're doing in the market. Now, whether you're disciplined to follow the rules and the process you outline, obviously that could be something to think about. That goes back to mindset expectation. I don't know why it doesn't have discipline as well. That's also something we talk about. See, there's some like subcategories as well that go into these. Like this was placed as like the overall template, and then subcategories like discipline, time management, macros, 90-minute cycles. This is under time. That technically could be mindset, time, risk, price, bias. It could be literally one word, but then all the subcategories underneath it can get you even more detailed. There's so many lessons that we can do for each of these topics, and so many things that we talk about in the private community related to these in depth. Even here, I don't really hold back so much, right? If any, like I'm out showing the process over and over so you guys can grasp onto it. People like Tony, Sufi, Nutty Fafa, who else? And then a couple others outside of my private community. Just what we talk about here allows for organization. It allows for progress. And hopefully this can allow you to see how you can organize things and identify and review. I even have a review process down there as well. I'll show you guys as well before we put a cap on this. But the main reason why I'm showing this, or why I'm mentioning this, is because you want to see what is the reason behind someone's success in trading, especially. What separates these people I'm looking at or trying to listen to versus the others? Most people are just trying to sell a model that they learned a year ago, that they copied from someone else in the same exact way, or they copy signals from someone and sell it, or whatever the case may be. They try to create a different name to things to try to sound unique. But here it's a process difference. All the different elements we all have access to, but the beauty in smart money concepts is how you can organize your own process. It doesn't have to you don't have to rename things and claim you created a breaker or anything else to be unique in this industry. People lack integrity if they try to create some weird dynamic name that's created to try to hide the fact that they learned from someone that was gracious enough to give them their time. Like ICT, for example. People steal his stuff. I will be the first. I will never be like the masses. And maybe that's to my own detriment when it comes to a business decision. At least, for the private community, and the growth behind that. Everybody wants to act like they're unique and creative. I created my system, but we all have the opportunity to do that with integrity versus the people that try to do it in a way that seems like they're stealing things and trying to create it in their own image, as if they found it. It makes me sick. And then, of course, they teach it wrong, so then majority of people fail using it, whatever it is they're teaching. I don't know any other trader, aside from ICT himself, that has things this detailed that allows you to create your own, aside from you having to piggyback off someone else. Because, not everyone's model will work with everybody else. I have 4 models. By the grace of God, I'm able to use all 4 of them. So then all 4 of them can be used as assets to other people. Maybe you like market maker models. Maybe you like YouTube model. Maybe you like the breaker. Maybe you like something in between that I don't use, but I can help you master so you can create your own system. There's ways to make your own system development, right? That's within the subcategory between price navigation or price models and framework. Creating your own system. There's ways to use the PD arrays and different things that we've learned to create our own system, aside from the rules that ICT has. Because everything ICT does isn't the only way to do it. It's not the only way to do things. He's taught in a way that allows that opportunity to be there for us all. He doesn't want us to be attached to him forever. He says that explicitly over and over. And that's the same. That should be the same thing for anyone else trying to teach these concepts. That's a core belief, a core piece to the identity of ICT's concepts, is the fact that you can create your own system. All throughout his mentorship, that's what he's showing everybody. He's putting in different elements, different things to allow you to then go ahead and find your own path, create your own way. So, these are just some things to think about. If you guys have any questions or try to apply this and in your own way, and you want to have more defined like subcategories of these, or maybe you want to run things by me and see if there's any critique I can give you, I'd be happy to do that. Again, this is used as a potential organization tool. It's used to identify problems, to self-reflect. This is like a framework behind all the things that go on through my mind, what creates the WMG trading system. Obviously utilizing 4 different models that overlap, from Power 3 to market maker models to breakers, YouTube model, institutional order flow entry drill, and then all the continuation variations to each of those models, which is also a subcategory of price models and framework. Right? So you can see how, these are broad topics about specific elements that all have intricate details that, you can get real deep on, as you develop into the trader you're looking to become, right? Some of the students that have really taken this upon themselves and utilized this as, just to shout out Maddie, my homie Bullfrog, okay? Harley, one of the best students in my private community, absolute superstar. And then, of course, there's some that, sit in the back end and like to crush it in silence and just observe and keep me updated on their own time. And those traders as well, they don't like to have a spotlight put on them, and I respect that. But yeah, it's proven to work. It's proven effectiveness, not only with myself, but the fact that I've been able to expose this to many other students and they've used it just solidifies the validity behind what it is that I teach. And it makes me continue to stay motivated to teach those of you that like to give me your time, which I'm grateful for. And it's proof other than just me sending out signals and saying I'm good and I do this and I do that. Others are also using this. We all don't take away from the fact that the components were built as a result of us being exposed to things that ICT has taught. But the fact that ICT's style of teaching allows us to have our own independent processes that are unique to us, which he's admitted recently and last year too. He has no problem with you claiming that it's your system. The problem is when you go out and try to think that you created your own observations related to the model, like breaker, you rename it to shooting star or something, or whatever the hell people try to create and take the responsibility for. But you should feel confident that when you do create something and you can answer all these questions and organize things, that you can feel confident and encouraged by the fact that it's your system. You know, again, like I mentioned earlier, we talked about the frameworks, right? You can have a counter trend framework, right? Price navigation, all these things. Every time I'm on a call, I'm dissecting these for everybody, like different elements of them, showing them real time, showing them before a week starts, and then showing how the week ends and how everything works together. You know, and again, those that listen and apply themselves and ask questions and actually put the effort in, who want to truly be successful and not just be signal junkies, you are the person I aim at on this channel. You know, and the results come fairly quickly. Doesn't mean you'll get rich tomorrow or get, there's no guarantee of anything at all. But what I can guarantee, what I always guarantee to both the people that are gracious enough to give me their time here on YouTube, and those that invest in me as their mentor to invest in them, I can guarantee clarity. I can guarantee clarity of process, clarity of organized understanding of what it is you're trying to look for, what it is that's required for you to get to where you're trying to go in terms of the overall process of trading well. That's a guarantee. And it's not just me claiming that. You can ask any students that are in my private community. They all say it. And it's fascinating. I didn't have high expectations when I first started coming out, because I've heard before the ICT concepts are very personal. Trading is personal as a whole in itself. So I didn't have high expectations. I just wanted to show what's possible with trading. But once I started teaching some of the things that I do, how I organize certain things, my personal process based on the stuff that I've learned, and I saw that it was able to impact others and break them from lacking clarity to having clarity so then they can do things on their own. It showed me that, there's a need for this type of perspective, especially in this industry full of idiots. Okay. A bunch of people that don't know what the hell they're doing, and they don't actually want to help people, And I feel I've been blessed by people that wanted to help me in this industry. I've been obviously blessed, like all of us, by the things ICT has taught. And then I've been blessed with the ability to understand these things and explain them simply in many ways. But of course, there's obviously complexities that need to be worked out in some cases. But once I figured out that, me passing the information and being a messenger for certain things can help others, here we are today, still here. Not only in my own trading, but seeing others thrive, like Sufi and Tony and Nutty Fafa and Maddie and Harley and Bullfrog in my private community, and so many others that are in that community. And then many others that, again, shine in the background, both here on YouTube that just DM me on Instagram, and then in my private community as well. I get many messages. I've gotten so much feedback, which I'm grateful for. And again, I'm super grateful for you guys sharing your time with me, because, again, everything's aimed at making you a better trader, showing you the realities. I don't hold punches, and I don't care, okay, what people think about it. If they don't like it, that's great. Go watch Joe Schmo blow his account and sell you a affiliate link to a funded account that he's going to continuously reset. Go ahead. If that's entertaining, that's totally fine. This isn't a place for those types of people, unfortunately, for them. But, trading is very unique. It's very special, has a special place in my heart. It's changed everything for me and my family. And I plan on passing that blessing. And I've been fortunate enough to see that it's already started taking root in other people's lives. I have one student that literally is on the brink of quitting his job, who's been with me for 3 years. It's taken him 3 years because of his own issues, right? Over trading, over leveraging, not listening. But then he finally took a break, came back, listened to everything that he's been learning, kind of still pushing back on some of the things I tell him to do. But nonetheless, his process has allowed him to make $10,000, $11,000 actually, between two payouts in 2 weeks. And he's talking about quitting his job. I mentioned it on my Instagram. And I have a couple others that live in other countries like Thailand. I have another student that lives in the UK. I have another student that lives in Greece. All of them are well on their way. Aside from, the over 150 plus students that I've worked with over the last 3-4 years at this point. And it's been truly amazing. Really, it is. And sometimes it just takes a different perspective, a different way of viewing things, a more simple approach to explaining certain things for us to break out, for a simple reminder in some cases, about certain things, to change our perspective, just to watch someone demonstrate the discipline outside of someone like ICT who's all the way at the pinnacle of everything. I don't claim to be extremely rich. I am not one to sell anyone Lambo lifestyle. It's going to take work. It takes hard work. It takes you showing up and listening to what's being taught to you. It takes you listening to yourself. It takes you doing things like taking this list and evaluating where your problems are, so then you can build rules and processes around those issues, so then you can not have to repeat them in the future. All right, it's at least you could set reminders. Like if you overtrade and over leverage, set a reminder that, hey, if I want to win and be successful, it's going to require me to not overtrade and over leverage. Because again, that's risk management. No risk management, all this other stuff doesn't matter. If you don't have the right mindset, these three things up here: time, because if you take an entry using any model and it's outside of the time element, it's not going to work. Okay? If you're not doing higher time frame analysis, nothing else you're not going to have a ability to be fully consistent and trust things. More or less trust stuff. That's why the higher time frame is important. And then you just continuously beat yourself up. You don't follow discipline. You don't follow the rules. You're out of timing, right? Like you enter right when you get into the market. You don't have any risk management. You don't know how to do reliable higher time frame analysis, so you understand what's actually going on. You don't understand bias and narrative, right? The difference in how to validate, invalidate things. If you don't have one price model that you're good with, and if you don't deeply understand each of the models you operate within, if you have multiple models, obviously there's going to be a problem. If you don't know how to target, how are you going to be reasonably able to take profit? If you don't have routines that allows all this stuff to be repetitive, right? So you can see how all this stuff creates you into the trader. And any questions and difficulties and issues you have can be placed in one of these categories. And then as you go through that analysis process of yourself, you can start to identify issues, what you should keep, what you should disregard, what works for you, what doesn't work for you. Okay, so again, that's the importance of why I'm sharing this with you guys. I hope that it's assisted you in some perspectives that maybe you didn't understand or didn't get exposed to before. I have a little bit more that we'll talk about with this for next week. But for the most part, I wanted to lay this out after we went through some of the stuff we went through today in terms of process. And of course, me getting into great detail about specific things, although some stuff may not be as exciting, it's very important, right? Because you have to know the why, the how can I improve? How can I act as a professional aside from just the traditional risk management, blah, blah, blah. How can I set this up like a business? How can I look at this as a business? Businesses evaluate. They have evaluation processes. They keep tabs. They keep good notes. They keep good records of their engagements. They keep understanding of what the risk is for their business. A lot of these things align with a specific business plan. Targeting. What's your target revenue? Routines. What do you do every day to have the same result for your business? Does McDonald's make donuts? Do they do a bunch of random crap that has nothing to do with making hamburgers and French fries? No, they have routines that their people do. Same with us. We got to have routines. The management of their business, right? And everything that goes with management. It's part of this situation. You need to figure out ways to keep your business moving. And this is what this is pretty much highlighting for us. How to evaluate yourself. if you have an answer, lastly, right, just to put a ribbon on this, because I know I've had you guys here for a while. But overall, you want to look at this as a way to start allowing yourself to really realize that you know what you're talking about. If you can have an answer to each of these questions and a process tied to that you can continuously grow into, take some of the stuff that I've mentioned and take some of the stuff that you've learned and create it into this framework in terms of your overall trading plan, and then use this as also a way to organize your strengths and weaknesses so you can figure out where your true strengths are and learn to understand your true weaknesses. You could start to learn to really improve. You could learn what aspect is hurting you and not allowing you to get to where you're trying to go. And again, if you have an understanding of like each process that creates these subjects, these categories, you have no reason to sit there and think, oh, I don't know what I'm doing. I don't understand what's going on. It could just be I'm making mistakes, breaking rules, doing this, doing that. You erase your ability to say, I don't know what's going on when you have an answer and a process to each of these things, because it's the whole business. It's each element to the business of trading, aside from taxes, which I'm not a CPA, right? But I talk about that a little bit in the private community. But yeah, it's a whole nother topic, right? But there's a bridge that you have to cross before you even get to that point anyway. There's a bridge you got to cross before you get the funded accounts. There's a bridge before you got to cross for many, many different aspects of trading. First and foremost, you got to be organized. You got to have the right mindset. Got to have risk understanding. And then, of course, when it comes to processes, time. And then everything else falls in alignment and has a process to it, which, again, I showcase majority of them here on YouTube. And then, of course, in great detail in my private community. For those that do want to look into what's offered there, aside from what I've mentioned here, there's the link in the description for you to go check that out. Whether you do join or not, obviously it's your choice. I provide as much value as I can here, but some need more of an intimate one-on-one relationship, which I can resonate with because I needed that too, which is part of the reason why I have a private community, right? But all in all, I love and appreciate all you guys that give me support here on YouTube, on Instagram, and in my private community. You guys are the reason that I even make content, because I can very easily just ride off into the sunset and just mind my own business, which may be the case at some point, and maybe just, I don't know. It's very early. I'm only 30, so I could be doing this for, on YouTube for years. As long as there's someone to help, someone that's willing to listen, I'm willing to be here and provide my time for those that want to learn. Because I love this industry, and I appreciate and love the fact that people that love this industry as much as I do, like you guys here that have been with me for 3 hours again, that I get to spend time with y'all, and hear you guys' concerns. And, I didn't check the gamers mentality, except when they need to, yeah, no worries, you guys. I appreciate the appreciation. Yeah. Hey, well, it's you. Time flies when you're having fun, right? Time flies when you're chilling with friends. So, but yeah, I feel I've taken enough of your guys' time. I think I've gotten the point across in terms of what I've tried or wanted to come into this call and get you guys to be exposed to. And we got through our overall analysis. I hope all that stuff made sense. I hope this helps you guys in terms of how you could start thinking about structuring things. This is like a thought-provoking piece of information, And of course, I'm here to help guide you guys, whenever I have time to on YouTube. And then, of course, the free Discord. Obviously, I'm going to still provide a lot of stuff. But again, if you guys want more of a one-on-one, intimate style type of learning, we are going to have a lot of resources. There's so many resources that are in the private community other than the free community on YouTube, like different PDFs and a bunch of really more advanced topics for some advanced students. And of course, just, a couple other things from the years. There's a lot of different things that I've created and will be continuing to create in the next year or so for those in my private community. And of course, I'm going to still share a lot of value for those in my private community, or in my Discord community, the free one as well. So whether you pick one side or the other, whether you make a decision to, or whether you need the more intimate mentorship style vibe, you'll still be able to get a lot of value from what it is that we do here on the YouTube channel. And if you haven't joined the private or the normal Discord, the free Discord, definitely do that, because we're definitely going to be more active this year in that. We've been very active there. So definitely join that if you haven't. But again, if you guys get value from this content, you have any friends that you think could get value from this content, I prefer that versus a bunch of, random people. Random people are welcome. But friends of friends generally creates a very amazing atmosphere. And that's how it kind of is with my private community, which is why I want to still carry that vibe here as well. But yeah, if you guys have any friends that you think would like this content, if you personally like this content, haven't liked the video, what the hell are you doing? If you haven't subscribed, definitely consider subscribing, because there is a place for everybody and anybody and everybody to call this channel home. Doesn't matter who you are, new, advanced, or just someone who likes to hear conversations about the realities of trading. There's a place for you here in the WMG family. So again, thank you guys so much for all the time you have spent. I look forward to seeing you guys continue to improve. And again, if you have any questions, let me know. Definitely join the Discord. And then of course, the links for private community access is down below as well. Other than that, I also have a bias and narrative PDF if you want to go download that as well. It's something I dropped like a week or so ago. Gotten some good feedback on it, so definitely grab that. It'll help you follow along when it comes to the Sunday calls. But yeah, other than that, guys, God bless. Appreciate you guys hopping on, and I will catch y'all on Tuesday this coming week for another live call.